Hello? Can you hear me now? Are we back? Sorry about that. I'm pretty sure my VPN cut out. Yes. Fortunately, I need to have a VPN. Anyways. So, yeah. I was about to get in on these 50 shares for the Buzz at $23. I think it's reasonable. I'm going to go ahead and post this. I'm going to send it 50 shares at 23. See if I can get it. It's actually up 0.2 now, pre-market. We'll see. We'll see. I'm patient. Cool. Well, we lost a couple viewers. My Twitter is not banned anymore, so I can actually post this. I don't know. I mean, I looked over Buzz, and it seems pretty good to me. Kind of wanted to hold most of those anyways, so you know they could throw in a few more for me and just further diversify my ETF. Let's take a look at it. I had posted this Buzz ETF. On Twitter. These are the top 10 or 15 holdings or something. Or current holdings, I'm not actually sure. But something like that. And DraftKings is actually the biggest. DraftKings, I mean, DraftKings, Twitter, Ford, American, Facebook, Amazon, Apple, AMD, Netflix, Tesla, Microsoft, Pfizer, Plug, Boeing, and Penn National Gaming. Sounds pretty interesting. I mean, we had positions in DraftKings. I have a position in Ford. American Airlines, we were talking about it, the travel, opening up and whatnot. Facebook I didn't have, but I was interested in it, especially with the shift that we've seen to online, and then all of the advertising and collecting all of your data. Well, this one is a pretty good play. I don't know if Facebook is in decline or anything, but they're still just massive, making massive amount of money through the advertising. And then of course Amazon, we had a position as flat. I'm not really sure if I agree with that as of now, but I mean going forward could be good. But it's just been so flat, so you know, I don't know. Apple, we as you know, we have a position in Apple. AMD, I cut it when it went down though. Netflix, I used to be, and I took some profit on it last year. Tesla, Microsoft, Pfizer, we did. Plug, I did before. Boeing is probably about to print. And the Penn National Gaming, I'm not actually sure about that one. So, that's pretty interesting to me. That one is pretty interesting. So, anyways, we got some orders in, and let's see. Currently 23, and it just released, so for it's only been available for 2 days now. We'll see how it does, but Venek is the Venek Vectors is the company that manages it, and they do a lot of good stuff, so feel pretty good about this one. Although it is pretty new. Wrote about this one on the blog today, so yeah. We'll see how it goes. See if we can get it hit. But anyways, free market is down a little bit. See how everything is doing. Triple Q is actually only down 1.27, so that's not so bad. S&P is only 0.5 down. And then the shaking my head is 1.37, SOX is 1.57, so looks not as bad as it did. Clean energy still is horrible, and so is the batteries. But that SPAC ETF is just so tempting, but oof, might want to wait until things chill out a little bit. Might want to wait. Might want to hold off on that, but it is definitely tempting. I mean, we could always start buying down from 28, 26, 24, 22, 20, and 18, something like that. Or buy down every $3, you know. But that one is super tempting. How's everybody doing? We're a little bit early today. Not really planning on doing all that much. Still kind of getting a feel for what's going on. Hopefully you guys read the new write-up that's available on my website. And yeah, I did some technical analysis on the 10-year comparison to the NASDAQ. It's pretty interesting stuff. The 10-year is about the same as it was. So I'm not sure if the markets were freaking out because they anticipate the the 10-year to go up today, but so far, according to Webull, it is still 15.5. And it was like 15 point, or that's actually 1.55. I saw it was, oh, there it is, 15.54. So 1.554%. And that's what I saw before. It was about the same as it was. Now, of course, this might not be accurate, but as far as I can tell, it is. So, I'm not really sure if they were anticipating it to go up more or not, but yeah, I did do the comparison on this, which I did find pretty interesting. But anyways, here we are on the month chart, and it is headed up, but it has been heading up. So, but anyways, hopefully you guys read my newest article, because that should be helpful, hopefully. Market is anticipating a rise when new bonds are issued under the stimulus package. Yeah. It's lagging for you today? Is it lagging for everybody? I had some technical difficulties before. My internet seems to be okay right now. Okay. So yeah, if you missed it, we have the Buzz order in 50 shares. We have an O in here too, actually. 50 shares, 58. How is the O doing? Oh, it's up pre-market. That's good. We actually bought it down towards the bottom down here. So that's good. But it's not that much money, but hey. Going up a little bit. Now I'd kind of prefer it to just stay down. Keep buying more of them, but yeah. I'm still feeling like dollar cost averaging into the tech and growth, to be honest with you. Nano Dimension is up 3.4%. The nuclear energy NXE is up 2.6. Seeing some interesting things going on here. Seems like it's a little bit mixed. Oh wow, look at that. GameStop up 10% pre-market. That's always funny. NNDM XPEV, cool. GEVO is 3.4. Interesting. Nano is up a lot. XPUNG. Nuclear energy. Oh, look at that. Reggie. BACQ, which we do have. FAS, which we got on Thursday, I believe. That's the financial sector bull ETF. Disney's up. All looking pretty interesting. And here are the oil and the bank stocks right around 0.5, 0.6. GUSH is not even that far up anymore, huh? Well, well, well. What's going on? Well, obviously the question on everybody's mind is, what about Apple? Apple is down 1.26%, which is not all that bad. Just stay around 120 and it could be good. I also want to get some more of the iPod and iPof. Could be interesting. I mean, it is just back down to when it IPO'd, so eventually they will choose a target to merge with, and then the stock should go up. It has really good management. Overall, I think it's a buy, but risky though right now. It's definitely risky. I wonder if that we can get the BES. Nope. Still can't get it. Well, congratulations to anybody that can get it. Eli, Callaway Golf, Caterpillar. My Caterpillar pick has done very well, actually. Yeah, okay, it's okay now that it's lagging. Okay, well, let me know. Let me know if it lags again. It seems like I was having some technical difficulties. Well, anyways, pretty much my plan of action is hopefully get some buzz, because that one seems to be doing all right. The holdings is just a lot of companies that I would want anyway, so I might as well just put them into one ETF. The only ones that I wouldn't really be buying right now probably would be the airlines, and I know. Dang, but the economy's reopening. It's a shift. There's going to be a lot of travel. Yeah, I know. Trust me, I know. But I personally wouldn't buy it. Also, the oil. I'm a little bit nervous to get in on the oil. Because look, if we're talking about like 2 months ago and 3 months ago or 4 months ago, like, yeah, that would have been a good idea. But now it's like, well, how much longer is this going to last? And then as far as the energy, I don't know. We'll see. But the energy is different. The energy I'd feel even better than, say, if we were just buying JETS, JETS, the airline ETF. Then I would be like, nah. So anyways, Buzz, I'm doing shares. I got an order placed for 50 shares at $23 right now. So we'll see. But so I mean, I'm not sold. Like the financial, like get some. I got a little bit of the FAS, which is the bull financial sector, and I feel okay about it because my portfolio was kind of missing those anyways. Even though, of course, I do have a Dow, an S&P 500 ETFs, but we could get a little bit more exposure to the financial sector, and so I'm okay with holding those to midterm. But I might take profits on those in the next month or so. We'll see though. I need to consider later. But and that's what I would do similarly if I had the GUSH or ERX. It's just not my style. Everybody has their own opinion, different strategies, and that's awesome. But for me personally, I would concentrate money into growth, innovation, and I'm okay if take some losses sometimes. That's gonna happen. So yeah. And that is what is happening now. Although it's not so bad. Where a lot of the things have already gone back to the 180-day moving average. I don't remember anything that's actually dipped below the 180-day MA. Well, so far. We'll see. But so far I don't recall. But hey, we can look at it. Because that's gonna be, you know, the 50-day moving average. Okay, I remember when everything was approaching the 50-day, and even like turn on CNBC and the talking heads are like, oh no, 50-day moving average support coming in hot. Key support. For sure, but 180-day EMA, it's the return to the mean. This is, if we can continue an upward trend over or along the 180-day, it's going to be fine. Of course, we would prefer to buy on the 180-day, but hey. Anyways, probably my biggest regret over the past month would be buying those. I think I bought 45 shares of Tesla. And I don't remember what I paid for it, but it wasn't cheap. And wasn't that long ago though. But I overpaid for it. And I already had 55 shares, so I wanted to get the 100 shares to sell the covered calls. But that that didn't work out. So my cost basis is, I'm still overall up because I got the other 55 shares much longer time ago. But anyways, I'm still up overall, but that's probably my biggest mistake. I'm going to try a new strategy of being patient and watching stocks to DCA. Need to cut some positions. I like that. Wait for the bottom with me. I'm not buying anything until it stabilizes in this green for 2 days. It's also not a bad idea. But also, if you want to do just commons, you only need to throw a couple $100 in a day, even less, depending on how much the stock is. But you could always, like, every 2 days. That's kind of what I'm doing. Is every 2 days I'll put some money into it, but totally not in a rush, because it could definitely keep going down, and that's okay. Because eventually it's going to be up. We just need to be patient. As Warren Buffett said, the wise words of Warren Buffett in his heyday. Not really his heyday anymore, but it used to be his heyday. And he used to say all the time, the stock market is a tool for transferring money from the impatient to the patient. So we need to be patient. And I still believe in these the disruptor stocks, the innovation. And that's why I'm a little bit skeptical on oil and financial sector. If it was anything else that was doing well right now while everything wasn't, I would probably buy into it more. But just because it's oil and financial sector, I'm pretty skeptical about that, because those are the two things that should be disrupted the most over the you know, the next upcoming however many years, 5-10 years, whatever you want to say. Put a number on it, put a time frame on it, doesn't matter. But those two should be affected the most. So, and then, of course, that's just my opinion. But I feel like I share the opinion with some other investors, most notably Queen Kathy. But hey, you know, so I think that I'm just a little bit skeptical, because I've seen oil for a long time, and as with everybody, and it hasn't been doing very well over the past 20-30 years or something like that. Not so well. There was that one crash in the late 80s, early 90s, I think, if I remember off the top of my head. Then we had a period of it going up. Yeah, we could look this up. I guess I could pull this up, but it doesn't really matter. I'm a little bit skeptical. But anyways, point is, I think that those two sectors should be the most disrupted. So I don't really want to take positions in them, but of course I have taken a bigger position in financial sector. Um, but we'll see. We'll see how it goes. But you could argue that this for example PayPal, Square, and others could disrupt um, the financial sector, but not just those. Obviously, there's a lot more to it. But could be also blockchain, and this is just the very beginning. So obviously, it's not game changer right now or anytime soon, but in the future, I believe we would shift more towards that and away from banking and stuff. And I mean, anyways, you look at Wells Fargo stock; it hasn't really done that well, anyways. So it's not like that's something I really want to be spending money on, to be honest with you. But hey. Without being none the wiser, it almost seemed like Tesla would have a good entry soon. Yeah, I think so. Because if we look at it, it's what, 30% off. The last time, like Tesla took, I read this somewhere today. I don't remember if it was Reddit or an article or the Discord. I don't remember, but I was reading some things today, and I came across, but don't quote me on it because it's not my words. But Tesla took two major corrections, and one of them was like 30% and 40%. So this is another 30% from 900 down to well, it's almost 600 right now. So yeah, and then it obviously bounced up and hit new highs again, right? Here was from 200 down to 82, so that was a big one. Yeah, well, not quite 200. Yeah, almost 200 down to 70 actually. So for sure. And then this was probably a big one. 500 down to 332. Yeah. Oh, that was a COVID one. No, it wasn't. That was September. Yikes. Yeah. Went down from 500. Bounce off the 50-day moving average. 328, 329. So yeah, that's about what, 30% right there. But this one was pretty bad too though. It was up from about 195 down to 70. Yeah, that's a decent amount. So but see, that's what happened. It's either it bounced on the 180 there, bounced on the 50 here, and that's not necessarily an indication that it's going to do it again. But hey, we're coming down pretty close to 180 day, guys. So I mean, obviously I wish I would have waited, but hey, and that's coming down close to my cost basis. My cost basis is 530 right now, so that kind of sucks. But again, I could see myself holding Tesla the next 5 years, although I probably I don't know. Anyways, I could see myself holding it longer anyways, so we'll see how it goes. But yeah, something like Fastly and Teladoc are below 180-day average, and I am unfortunate owner of these shares all the way down. Helium. Well, I mean, I guess I was referring to the mostly the ETFs, to be fair, because that's what I did, and that's what I find myself doing more of when we're in periods like this. All of my, I don't even want to say they're BS positions, but they're just the small short-term options, mid-term options, just a couple $100 here, a couple $1,000 here, just whatever. I'm just trying to create some extra income, get a cash flowing, you know what I mean? I tend to find myself cutting those positions because those do really well and they're much easier to deal with during a bull run, obviously. So flat or down, they're going to get killed, obviously. So I find myself cutting all of these positions and getting more into the longer term ones, which I'm a fan of ETFs, no matter if it's SPY, no matter if it's TQQQ, the 3X ones, shaking my head, or the 3X one. or even like Buzz, B-U-Z-Z. This one seems pretty interesting. It's just a good way to diversify. And Buzz is not all that boring. SPY is a little bit boring though, not gonna lie. I spice it up a little bit with SPXL or U Pro, but Buzz is not, because those are pretty, the social sentiment ETF, which I have a 50 share order in right now. Those, what they're holding, it's pretty interesting to me. So this one, it's could be good. We'll see. We'll see. See if the order hits. Yeah, I would appreciate if you guys did like the video. It would help a lot. Sharing it around would also really help too. Yes, it does. For sure. I'm actually almost hit my goal of 4,000 watch hours. So that's gonna be cool. Although, sorry, but I gotta start running the ads on. That means I'm just gonna run ads on the videos. Sorry guys, but gotta do what I gotta do. Well, that's pretty cool. So we should probably hit that tomorrow or the next day, I assume. But it does, and especially it's really important if you want to help me out to share these days, because when the markets are going down a lot, people tend not to look at any market related content. People might not even look at their phones and hang. They might have just said, well, forget this stock market thing, it's not for me. Come back later, I guess. And a lot of people do that. And that's just human nature, so it would help to share it right now. But for sure, since the market's down for like 2 weeks now, definitely noticed a drop off in views, I guess you could say, or clicks. But yeah, I talked to some other influencers, and it's pretty much the same. So anyways, let's see if we can find anything interesting right now. There's been some good news released on Tesla. Apparently, Cybertruck availability around April. They're building a new energy storage system in Texas. Yeah, it would be really good. And also the FSD as well. Could be really interesting. Which it seems like they have the beta out. So it should help. I mean, we'll see. But it's still down though. I mean, it's getting hammered. So we'll see. We'll see. We'll see. But hopefully... it's getting killed so much, so hopefully we can see a little bit more green today. But let's go ahead and check out the across the board here what's really going on. ETF index, okay. The Buzz is up 0.64%, so I don't know if that's going to get filled, but we're going to try. Dow Jones is up 0.2. Brent is up, which is cool. SPY is barely down. Semiconductors have improved. That's good news. NASDAQ is down 0.6, which has improved from 2 down 2.5% almost at the worst. So things look like they're getting better. ARKs are improving. Seems like things are improving. We'll see. The FAS is actually the best one for myself. 1.78%, cool. And then we have the energy and the oil. Yeah, SOXL was down more than 2%. No, sorry, almost 5%. And TQQQ also more than 4%. Crossing Q2 actually so earliest would be Cybertruck. Yeah. Crossing my fingers, my cost basis for a few shares of Tesla's around 708, I think. Yeah. That definitely stinged a little bit, but should be fine because overall, that's why I'm not freaking out over that, because I mean, look, the case that I'm arguing for Tesla is, number one, the Cybertruck estimated, some estimates that I've seen online have the Cybertruck at around 50 billion revenue annual revenue for Tesla. The FSD, they're always increasing the price for the autopilot and whatnot. And once they improve it, then it's just going to be better. They have collected a lot more data than any other company for that. And this is going to be, probably Amazon's going to want a piece of that pie. The autonomous driving, probably Apple's going to want a piece of that pie. I mean, they were coming out with like some weird cross between like a Hyundai car or whatever. So yeah, like electric one, something like that. But I'm just saying, a lot of people are going to want a piece of that pie. And I would argue that the autonomous driving is actually more lucrative than just selling cars. Maybe by far. So those are the first two things. Also, in November or December, so towards the end of this year, they're supposed to show the Model 2 at the Guangzhou Auto Show. And Guangzhou is the city in South China, a big industrial area. Yeah, so they're supposed to show the Model 2, and the Model 2 is said to start at $25,000 based on how popular Model 3 is in China. And it was starting at, I think, what? It was like 35, I heard, but it's not actually, because it was 270. So it's like a 41.5, which is the funny thing is that's the same price as the Neo ES6. But anyways, so 25,000. I don't know if that's domestic because the prices of the cars are different between in other countries and in China. Although the Tesla ones are actually pretty close. The German ones are like 2 times more expensive. But so yeah, I mean, so I'm just assuming that even cheaper Model 2 would just be immensely popular. So that should do wonders for revenue. Well, especially if they're pushing those out in the Shanghai factory. So that's the argument. I mean, those are the 3 major things that are coming up. I just don't see it. I mean, what was the price of a share of Tesla before they released Model 3? You know what I mean? That would actually be an interesting thing to check out, or even before they started selling the Model 3s in China, in the Chinese market. Also could be interesting. And now even the Shanghai factory they're shipping the cars to the UK. So in the UK they're not getting, and somebody double check this. If you're in the UK, you probably would know. But I'm pretty sure what I read online was they're not getting in the UK, they're not getting from the Fremont factory, they're getting them from the Shanghai factory. So that's, they're pumping them out. They're pumping them out. And so I just assume that if they do that with the Model 2, which is a little bit smaller and it's more like a hatchback sedan. Well, anyways, nobody knows, but I think that's what the rumors are so far. And for $25,000-$30,000 starting, I mean that's gonna be great. So that's my argument. So I mean, there gets the point where it starts getting cheap. And I'm not necessarily saying now is cheap, but if I didn't already have 100 shares, I would be dollar cost averaging in it, because I think just based on those 3 points, I think it's still, there's still a good bull case to be made. I'm getting killed on the ICLN. I might close it at 50% loss and upgrade my account to level 3 options so I can first sell on my trading like verticals and condors. I can always get that option again in 7 trading days and probably get a discount. Yeah. I mean, to be honest with you, it might not be a bad time to do that. But then probably as soon as you do it, Ed, probably everything's going way up. So yes, please go ahead. Please go ahead and do that. Take one for the team. Any major changes? Not really. Nope. The worst thing is literally is clean energy and the battery ETF. I mean, that's crazy. Even that's doing worse than the SPAC ETF. That's amazing. That is interesting, for sure. Another one I would like to look at into getting is during this dip, buying it is the OGIG. And this is actually the Kevin O'Leary Billionaires ETF. And this one is about, this is a global internet giant. So, I mean, we're talking about not just the Facebook and Google of US, but around the globe. So this one could get pretty decent exposure. Let me Google the top 10 holdings for this. Okay. So here we are. Fun weight. This is by the biggest to the smallest. The biggest is Amazon, then Google, Tencent, Alibaba, Microsoft, Facebook, Meituan, Pinduoduo, Bilibili, Shopify. You know what I mean? That already sounds very interesting. Snap, Zoom, Mercado Libre. Okay. Roku, CrowdStrike Holdings, JD, Jingdong.com, Zalando, NetEase, Tencent Music, Delivery Hero. Don't know what that is. And then we could go on and on. Etsy, Netflix, Pinterest, Zynga, Zscaler, DocuSign, ServiceNow, Twilio, Chewy, JustEatTakeaway.com, Envy. Is Envy, does that stand for Nevada? Okay, well, anyways, you get the point. 37.5% information technology, 30% consumer direct discretionary, and then 32% communication services. Pretty interesting. By country allocation is 60% US, 22% China. Got Germany in there a little bit, then Canada, UK, Argentina. Pretty interesting. But I don't know. That one definitely seems to me like it's worth putting some money in. What do you guys think? It could be good. I mean, obviously, this one is going to be one that's hit pretty hard. Then again, it's 22.5% the internet giants in China. And then also the rest would be Europe and I guess like Japan or something in other Asian countries. I mean, for the US, it's actually only 60%. So this could give you the diversification needed to not be bleeding so much right now. Well, anyways, let's take a look at the chart. So it is down a lot. It's down a lot. But nevertheless, not at the 180 day. But I think this one could rebound pretty nicely once everything does rebound. But then again, you basically could just get a TQQQ and call it a day. You know, because, but I don't know. I mean, this one could be interesting because it does have diversification. But let's look at the performance here. Let's go switch over to axis, switch it to the percentage, and then try to line that up right at the dip, the March dip. Let's just say. So this one is up 154% since the March dip. That's almost a year. Actually, now that I think about it, huh? Pretty much 51 weeks almost. It's up 153%. Pretty good with this big cool off right now. And it did not do that bad in the other ones. But of course, all of the internet companies are being slapped right now. But without this dip, the all-time high was up right around 200%. So draw your own conclusions with that. Look at the SOXL. Even with this dip, SOXL is still up from around the same point. It's still up 600, 700%. It's just ridiculous. And from the all-time high, it was up more than 1,000%. So, but of course, you don't want to invest all your money in SOXL. TQQQ would probably feel a little bit more comfortable. So this one actually did bounce right on the 180 day. So, and this one is tech heavy. So I'm looking at the dip to be over relatively soon here. But don't hold your breath though. Anything can happen. Probably just because I said that, it's probably not going to be. But that bounced really neatly on the 180 day. And still, it's up 330% since the March dip. So no matter what, if you just buy it on a dip, and the March dip was kind of big. It was kind of big. So if you just bought it, and obviously you're not going to buy it at the bottom, and I'm not saying that, just to get an idea. We have to choose some point, so I usually just choose at the bottom. Dip. Obviously, we're going to dollar cost average. I dollar cost average starting. I dollar cost average probably all the way up here, and then dip down here. I dollar cost averaged. I don't think I even did in the November one. Maybe I did some. I know I switched over my 1x ETFs to the 3x, but anyways. Another halt on BES. That's interesting. I can't buy it anyways. Whatever. Ideanomics is up 0.35. Their wireless charging is such a good idea, and I mean, implemented in China, this could be really useful because, to be fair, there is just so many electric cars. And you know what? I think that's one of the biggest, that's the hardest thing maybe for people that haven't been to China recently, is you don't realize how many electric cars are here. It's crazy. And it happens so fast. I'm not really sure why. Mostly due to Tesla, I guess. Tesla is so famous here. Even in China, people love Elon Musk. It's cool. Anyways. And with the Model 3, I mean, it just took off so fast with the cheaper Model 3 coming in. It's crazy. People love the logo with the T. They love that logo. They love that it's not a made in China car. I just really think that there's a huge bull case to be made. But also for Neo too, because it's also a very nice car, but specifically Tesla with the Model 2 coming out should be a beautiful thing. Should be beautiful. Well, anyways, we still have a good 45 minutes. The market's open. Anything you guys want to check out? Okay, SOX is only down. It's almost breaking even here. This is really good news. MP is up 1.28%. Nano is up 5%. Get out of here. Buzz is up 1.23 now. Disney 2.2. Workhorse 0.8. Oh, don't tease me. Markets Xiaopeng is up 4.5%. I'm actually going to the Xiaopeng store maybe tomorrow, making a video. Maybe not. Maybe the next day. We'll see. But sometime this week I will. And also I'm planning on doing a video on. Someone requested I do a video on how I got started investing. So yeah, it's cool. I can do that. And also I was having some conversations with some of my followers about real estate investing, and I think that would be cool to do a video on. Totally different, but it's investing though. And right now I'm in the middle of some real estate deals, so I mean, it's really fresh and on my mind and stuff, so I might do it. But we'll see. So let me know what you guys think, or if you have a better idea, let me know. Especially on the red days, just I think maybe I should do something a little, change it up, because even though I will still do the write-ups for everyone to read, but as far as making a video, you know, I think a lot of people are depressed. They don't want to watch it, to be fair. Although my analytics are not doing that bad, but could be better. So I was just thinking about changing it up a little bit. So let me know what you guys think about that. Yes, real estate right here. REI? Real estate investing. Oh, yeah. Okay, cool. I will do it. I mean, it would be really cool if we could do a live stream about that, which I guess we could do it right now since we are live streaming, but still though. Do the basic video and stuff, because the real estate investing, like, I love being other people's opinions, because that's the thing is there's just literally basically an infinite number of markets to do the real estate, and it's impossible to know everything about everything, and it's impossible to even get a general idea about a lot of the things. So for the real estate investing, I find myself, even though I don't live in the city, but I choose a market and I'll go deep dive into this market, just studying it and following the market for maybe a year before I buy anything. And then I can really get, you know, maybe I've been to the city before, maybe I visited it, maybe I haven't even been there, but I'll still study it and wait, then finally get something. So, because it's just so hard to know. Like from where I'm from, like obviously I'm from Houston, so obviously I know that one. Yeah. And I lived in Vegas, so obviously I know that one, but I've looked into a lot of other markets too. But I spent most of my time focused on those two, and then a little bit in Denver, San Francisco, Southern California, South Florida, like Austin, for example. Texas in general, pretty familiar with. Mostly like that. What type of real estate investing do I do? So, residential for the most part. I'm thinking of getting into commercial more, but it's not very interesting for myself. Because I don't, like, I'm all cash at this point, and I don't plan on not being all cash. I don't plan on cash out refinancing anything, because if the market crashes, which it probably will in the next couple of years, because eventually they're going to have to raise those interest rates. And you see what happens when interest rates are being raised. Bad things happen. So anyways, if that ever did happen and the prices did crash 20-30%, then I would still have plenty of equity to cash out and buy other ones. I'm kind of at that point right now. Buy and hold? I mean, no, I'll rentals. So single family, multifamily, nothing special. I mean, I'm not super rich, so I don't own, like, you know, huge like commercial complexes like malls or something like that. But anyways, doesn't seem like much a good time to buy real estate right now. Low inventory here. Where's here? Southern California? Yeah, it is low inventory. A lot of places are low inventory though. You're right about that. I was looking around. It is, but cash flow is still decent in some places I'm looking at. You can still get 6 to 8% if you do it right, and that's not with any leverage. So yeah, but I'm actually selling. I have a condo in Spain. I have a condo in Barcelona that's horrible. It's just doing so bad. I'm selling it right now, and I should have. I think I mentioned this before, but seems that I should have an offer coming in, hopefully within the next couple of days. So I'll be glad to sell that, buy something, probably in the States. I mean, I guess I could take the money and buy some more stocks, but yeah, yeah. I know. I'm not so worried about it though, because even if it does crash 20%, it's okay. It should bounce back in a couple of years. I'm not so worried about it. Because for me, it's rentals. I can get cash flowing. Could be, it's interesting for me to have this income. So I think about it maybe a little bit differently, but at least I'm all cash. So if it did crash 20%, or who knows, maybe more, and then I still could take equity out and buy more properties. So that's the idea. So I'm not like totally aware that it probably is going to pull back. Maybe I don't know. I'd probably say a year and a half, 2 years. But who knows? Maybe I can get in and out of some things. I was looking at in Southern California about this new construction, although starting to think it might not be the best idea, but yeah, we'll see. With the appreciation over 2 years, and then any rental income I could get, which it shouldn't be very hard to rent, I think. But yeah, then you could just get in and get out after 2 years, possible. I don't know. I've been thinking about it, but I have this property I'm selling right now, so I need to do something with this money, and I don't want to hold cash. Bitcoin, been there, done that. Stocks could be an interesting buy right now, but I don't want to be too heavy in stocks. Do you know what I mean? So, anyways, it's good stuff. But my point about all of that was that I'm probably going to do a real estate video, and I'm not a real estate expert, so please don't thumbs down my video when you see. Just thumbs up it anyways, even if it's bad. Smithville, Texas. I don't even know. I'm from Texas. Don't know what that is. Smithville. Gonna have to Google it. Let's do it. Is this turning into a real estate video? Seems like you guys are more interested in real estate right now. Hey, that's cool. I don't blame you. Times like this, I either want to go chill on a beach or just look at real estate all day online. Wow, this is a small town. Colorado River, huh? Oh, it's in between Bastrop and LaGrange, huh? No, that's really close to where I grew up. Nope, that's super close to where I grew up. I probably grew up, I don't know, a little over an hour drive from there. Good stuff. Yeah, I'm looking somewhere in this area, but I don't know. I mean, why there though? It seems like should get a little bit closer to Austin. Maybe in Buda, or possibly even Manor. Down here, there's some new houses being developed. I think, if I'm not mistaken. Where Hope Floats was filmed. I don't know what that is. New Tesla plant is close to it. Really? What? I thought the Tesla plant was on the northeast side of Austin. Man, I have no idea. I thought it was closer to Rock. Tesla, Giga Texas. Oh, dude, there's some. That's where. Oh, it's there. Dang, yeah. Yeah, that's what I was thinking. Get closer to Austin, anyways, because it's and this eventually will swallow these new developments out here to the south. And that's interesting though because I thought it was up towards Rockdale. Well, that's where the new Bitmain data center was. I think I might be confusing those. And I've got a stupid story about that too. Maybe for another time though. But anyways, yeah, I was looking at houses online. There's some new neighborhoods being built. Austin is overall just super cool, real nice. I like it. Pretty expensive. Yeah, is it really? You know, I used to live in Austin. Not very long. I think I lived there for like a year. Because I'm from the area. I know. Thanks for correcting me, Ben. People from Austin are moving to Smith, driving up the prices. Okay. Probably it's a great idea. I'm a little bit I'm a little bit worried about buying in a smaller market though. At least if it was closer to Austin, I'll be like, yeah, great idea. But this one is because I've literally I've driven that road so many times. And there ain't nothing much going on. Although it's been a long time since I've driven it that way. But oh yeah. Must have driven Smithfield so many times. Sure I have. But just didn't even know what it was. Yeah. But I mean it's a good it's a good idea though. Not for me though. I'm personally like west up around Lake Travis. There's some cheaper real estate out there and it's really nice. Although it's a little bit of a drive, windy drive into the city, but there's good schools and the houses are reasonable. But I want to rent these things out, so yeah, not so interesting. Overall, it's not going to be that good because the prices are just high. And anything that is going to rent easily, it's not going to be a good deal on it. So, you know, whatever. It's all good. I mean, it is all about the numbers, but how easy would it be to rent property there? And like, what's the condition of the properties? How much is how much are they making? I mean, we can totally. Okay, okay, guys. Monica, I will look at it for you. I will check it out. I believe you. Let's check it out. You guys can see this. Okay. That's that's a pretty house. To be honest with you, that's pretty. I like it. But man, that's probably super old and got a lot of issues. So let's see. Ooh, charming Smithfield. Okay, I didn't know. Oh, one of the most desirable homes in charming Smithfield. Okay, 1920 Victorian. This pretty nice. If I could just pick this home up and then put it onto 6th Street and then rent it for 400,000, by the way. But still, I mean, this is obviously pretty quaint, special. You're gonna pay $400,000 for 2,300 square foot. Okay, this is a bad example. It's built in 1920, so it's kind of old. We'd have to get that checked out. So let's see here. If we just went ahead and paid all cash for it, which is usually the start, so it's going to cost us estimated $773. Property taxes and home insurance. Won't be an HOA here, and the schools don't look very well. But okay, fine. So it's 2,300 square foot. That's too expensive. Like, not much for sale here. Am I doing this wrong though? filtering 700,000. Okay. Well, what else we got? 175. That's the cheapest thing. 1,700 square foot. Doesn't look very nice. Old. Clean. Just the colors are weird. The ceiling is weird. Walls are weird. Doors are weird. This just out. It's just dated. That's okay. If it's in good condition, then those things are cheap to fix. Built in the 60s. This would cost 3 something, 30, 340 to maintain. Okay, so 1,700 square foot. So we kind of have that. Now let's look at the rentals here. Okay, so that's really close, but that one is 900 square foot. Whoa, only 3 for rent here, huh? 6 days ago, 4 hours ago, huh? This is small. One is not very big. $1,300. Kind of a lot. It's interesting. Doesn't look as not a real listing. Get out of here. Doesn't look as bad as I had thought. Seems pretty interesting. I don't really know how much these could rent for, although based on those 3 that were for rent, and this is in good condition. I mean, I would like this one is much nicer on probably a better street, more closer to the downtown as far as I could tell. And yeah, this one is a lot better condition, a lot more updated and whatnot. Remodeled. Yeah, well, okay. So what's it gonna cost? 700 a month to maintain. Oh, the rent estimate is 1,100. I don't believe that. Those other ones that are not that nice were asking 11, 13. So this one maybe what? 16, 17? I just guess. Okay, just guessing. So let's just say best case scenario 2,000. 2,000 and we're paying what? Say 600. Just say 600. Maintain it. That's 1,400. 16.8 per year, and then 320. Maybe we can get it for 320. Let's just say 5.25. I mean, it's a really cute house, I have to say. I would like to take them houses and put them in other locations. It's nice. 5.25, not very interesting. And I'm just totally guessing because I don't know this market better. It could be worse, but I would expect that's pretty reasonable. Maybe you could do 6%. Then again, 6% is, there's a lot of places in Texas we can do 6%. So that's just, obviously, that's just like bar math. None of those numbers are real. I'm just totally estimating and guesstimating. And what do you guys think about my guesstimation? Okay, so Monica, let me know if those numbers, if you think it's reasonable, because I have no idea about this market. But yeah, the historical district, those are that one and the one for 400,000 were in the historical district, I'm pretty sure. But yeah, those are pretty nice. Have you been a part of a real estate installment sale, multi-year installment to spread out the gains? I have not. That sounds interesting. I really like real estate because it's something I can touch and live there if I want, stay there. How do you currently feel about net stock? Been falling lately? Dip worth buying? I mean, look, everything has been falling basically, especially those internet ones, net, and a lot of other ones. So my stance has not changed on those companies. Those companies are still making money. They're not like they're out of business or anything like that. Everything's going to be fine. We just need to have patience and give it some time, and it'll come back. We don't know how long the dip is going to be. That's just how it is. Welcome to the stock market. But hey, that's another reason to be interested in real estate. You know what I mean? Because of real estate, at least you can get the rent every month. But then again, if we had O, we can get 4.66%. So let's just say my numbers were right. We can get 5.25%. And that's not including repairs, by the way. You know what I mean? That's just including insurance and tax. Assuming that it's rented for 12 months out of a year. All 12 months. And assuming there's 0 repairs, which is unrealistic. So, you know what I mean? Just how it is. Of course, there's going to be appreciation. But there's also appreciation with O. And it's 4.66. So it's 4.66. It could be almost the same if you factor in repairs and whatnot. Could be almost the same. And you're getting those dividends, 4.66 paid every month. Plus, O is going to appreciate anyways. And you don't have a headache. And O, they don't stop paying the dividend for 1 month out of every year. But if you're actually renting an actual property, it might not be leased out the entire year. There will be periods where you're looking for a renter. I mean, hopefully not. If you can time it right and you're prepared and you know what you're doing, hopefully it's not long. And you're in the right market, but it is what it is. So, in my opinion, O is awesome, but for sure it's not that much money. But with the appreciation, on average, it was like 24-25% per year over the past 25 years. So I'm not used to buying houses that are turnkey. I know that demand in that area is high and will continue to go up. Rentals too well. Yeah, I can see. I basically that's my feeling based on there's no inventory there. It was interesting. It's interesting. Thanks for pointing that out. Consider it if anything comes my way. Yeah, I mean, so Monica, what do you do? So if I want to buy a property that's like really bad condition, you're gonna come in and fix it up and design it and make it look spectacular? Is that what you're doing over in Smithfield, Texas? Sounds good though. It's interesting. I legit need someone like this. No joke. Seriously, let me know about that. Okay, what time is it? Okay, got 20 minutes. Let's go ahead and check out the markets. Pong is up so much. All right, what's the damage? Dow's up a little bit, 4.4. S&P is flat. Semis are flat. Shaking my head is down, but SOX is flat. The ARKs have come up a lot. NASDAQ is down 0.44, which is about the same as what we left off before we were looking at real estate. Interesting. How's O? Speaking of O, okay, it's up a little bit. That's cool. And crypto is doing pretty well. Finally making money on my ETH. At least I think. But I bought it on the way down, so the last time I bought it was 1,500. And I had already sold some and let the rest ride it back up to 2,000. We'll see how that goes. Anyways, looking not so bad. S&P bulls are up. Dow bull is up. Energy oil bull is up, and financial sector bull is up. That's good. SOXL is not so bad. Tech and NASDAQ. Okay. Wow. This turned around pretty nicely. I mean, I know it's way too early to be considering anything, to be honest with you, but look. On the day chart, TQQQ bounced on the 180-day moving average. TECL almost got down to the 180-day. SOXL was a little bit above it. But mostly I was looking at the NASDAQ one because that's what was in focus recently. I don't know if that's right or wrong. That's just what I was doing. So I saw this. I saw it bounce off the 180-day, and I was thinking like, well, that is 180-day is obviously some strong support, but we look at just the triple Q. Still had some ways, I mean. And then also with this line, I don't know if you guys saw my article, but this one. Yep, so this dip, this was the September dip, which everybody is comparing it this one to. Oh, I also did. So the slope, it's almost the same, although I guess you could argue that the bottom was here, huh? Anyways, that's until it started coming back up at least. That's what I did. Because it was flat here. But anyways, so the slope is actually this line right here. How long it is and how steep the decline is. So let's just put this line, pop it right here. From the top to the bottom. So looks like what we got, like 1 or 2 days of could be flat or could be down. But obviously that's not that's just wishful thinking, I know, but hey, you never know. Especially with the TQQQ, you know, because I don't put so much weight on the importance of technical analysis. It's all about the fundamentals. What is the 10-year? Is it going up or down? Let's see if these things, let's see if the rising bond is getting priced into the market, because even if the 10-year keeps rising, which probably it will, and it is right now. It's gone up about 37 cents ish, 33 cents. But it doesn't mean that it's not going to go up to around 2, I would say, which is a decent amount more. But that doesn't necessarily mean that this is not going to get priced in already and the tech to stop falling. You know, especially a lot of the recovery stocks are already pre-COVID levels anyways. Yep, that's pretty much what I'm doing. My friend moved there from Austin, bought a B&B and just in a distressed home. I'm making it pretty cool. So you mean like construction, like if you want to knock a wall down, or just design, like interior design? But good to know. Yeah, I was looking. I might need to do this because I saw something that was. I saw a property today or yesterday that I found was pretty interesting. Seems like a good deal, but ooh, it's in bad shape. That's good though. Both. Okay, cool. All right, Monica, you know what? Once you finish, I would love to see the before and after pictures. That would be sweet. Good, good, good. Okay, that's really cool. Yeah, I mean, I would love to see that because I was looking at something. Do we have time? I'll show you if you want, no. Knocking some walls down in my house. I know I want to knock some walls down in my house when I see SOXL go down 10% every single day last week. But yeah, let me show you this one that I found today, the other day. I'm waiting for the real estate agent to get back to me though, because I don't know if it's still active. I called an agent and they were like, well, they're not sure if it's still available. Okay, let me know, please. Whoa, look at that one. I need to buy. Oof, that's pretty. Don't want to look at that. It's been a long time looking at things like that. Whoa, that house cost $1 billion? Come on. Seriously? I want to. Okay, that one I have to look at. What's cost $1 billion? That's only 3,900 square foot. They're funny. But yeah, anyways, I was looking at. I found this one on Lake Tahoe. Because this is like a reopening play. Everybody wants to go traveling this summer type of play. Let's see. Let me know what you think about it. But it's on the Nevada side, so I can save in taxes. No income tax, and the property tax is almost non-existent. So it's this one right here. So if you see around, this is a 1,900 square foot, and around it, 2,200 square foot selling for 2 million, 1,900 square foot selling for 2.1 million, and those are nice, nice decoration, nice home on the inside. This one I found for 850. It needs some work, to say the least. It needs a lot of work. So yeah, but it's close to the lake. Got lake views. Got a nice balcony. Pretty huge balcony. But the interior is to be desired. Kitchen is so stupid. This room, the bathroom is stupid. Stupid. That's so ugly. Ugly, ugly. Extremely ugly. I don't know what they were thinking with this room. Why are there pants on the walls? Oh, it's boxing pants. Okay. I can understand that. The carpet is just in the ceiling. I don't understand. Like, what is this? I think this was the laundry room. Maybe it was an add-on or something? Can't figure that out. That's weird. It's very well, maybe it's because it's on a mountain, so I had to go down. Anyways, well, there's the laundry room, so you get the point. But point is, this one is 850, it's 1,900 square foot, and the other ones in the area of that 1,900 square foot is 2.1, and the 2,200 one for 2. This one is 725, but it's only 640 square foot. So it's 3 times bigger than that and just $100,000 more. You know what I mean? So yeah. Price per square foot? Yeah, I don't even know. I guess I could check. I just compared like, oh, these other ones, same about similar square footage, they're going for this much money. And they have nice decorations. I didn't even compare the square footage, price per square foot, but I can. There may be something pretty above the drop ceilings. People do weird things. I know that's. You have to de-weird the weird things. That's funny. I like that saying. But anyways, that's what I was looking at. I mean, it has potential because of the rental market there and the opening up. Could be an interesting play. And the appreciation has just been pretty good. So I think it's got another good year or two left. We'll see about that. But let's see what. 445. And this one, similar square foot, a lot more. A lot more. It's 1,063. So for sure. And then this smaller one, probably even more than that, is 1133. So for sure, this is just, I mean, it's crazy cheap. Even if you go to the very biggest one, is a 5,500 square footer, only 1.95. But that looks weird. And so I assume that it's not as nice inside, but it looks pretty good to me. I'm not really sure why there's big differences. Although this one is not as nice as some of the other ones. That one's cheap as 355. I'm not sure. I don't really know. But mostly they're selling for around 1,000. $1,000 a square foot. So I think there's some. I think there's some deal to be made on that one. 48 million. No thanks. I don't want to put that much in real estate. If I had that much, I'd probably just buy SOXL and be a billionaire in no time. So yeah, I'm not really sure what's going on with that one, why it's so cheap, but I think it's because they, in the Lake Tahoe area, they just banned the short-term rentals. So the vacation, like the Airbnb vacation, whatever that's called, they just banned that because there's too many drunk college students that sound like. Anyways, they're only giving out like 600 permits per year. And I'm pretty sure that yeah, I'm pretty sure that for sure is no brainer. I also think so. That's what I was thinking, and it's got a lot of potential because it's the views and stuff. That's what I think, but I'd have to check it out. But anyways, yeah, they're banned the short. They're only giving out 600 licenses per year, and that house, based on all those random single beds, seems like they were doing short-term rentals for like skiing there or just playing on the lake or something, spring break or whatnot. But yeah, I mean, I don't know. Seemed good to me. I just look around a lot of different markets. But yeah, whatever. So much for the real estate today, huh? Although I love real estate, a lot of fun. A lot of fun. But that one needs a lot. It'd be nice though to get that one. Anyways, see what's going on here. Hopefully we got some good news. Oof. SOXL is 0% right now. Things are improving. My FAS position is actually going to be up a little bit. It's up 2.3. It's not doing so bad. Dow is up one. Well, this is a 3x. THCX has turned around a lot. OUSA, that's the Kevin O'Leary dividend one. It's doing pretty good. Print is up, so our print should be printing right now. The Buzz is doing all right. It's up 0.85. I would like to get some of those. I'd like to get a decent amount of those, to be honest with you, but I don't want to spend so much money. I need to reorganize things. We'll see. Buy is up 0.14. Wow, ARKQ is positive now. SOX is almost broken even. ARKW is not almost broken even. Triple Q is only down 0.3. The worst ARK is going to be ARKF, down 0.43. Interesting. It's turned around a lot. I mean, I remember on the Discord earlier, we were like, ugh. By the way, guys, if you haven't joined the Discord, please find the link in the description and join the Discord. I'm pretty sure everybody here is on the Discord, though. Anyways. Let's turn around a lot. We thought that it was going to be much. I literally activated Jack and Rose mode. Iceberg mode, aka Titanic mode. I might have to deactivate it, but too early to say. We've seen this happen before a lot in the past 2 weeks. Actually opened in green and then it just dropped. Face of the earth. Nice. Someone asked Kathy Wood to use print to 3D print some monies. Yep. Please 3D print some gold bullions. Have you done ARKK? What do you mean? I definitely have. I have some leaps on them right now. And we're going to be taking a look at that. I don't even want to look at my... Oh, I guess I will. So, let's see. What are we doing today? Today's the 8th. Are we up or down? Yeah. Well, I don't know why this isn't right. Cause I tried to. Oh, okay. But those numbers are. Oh, here it is. Okay, yeah, that's right. So we're actually up from. That's from the other day. Let me change that. Okay, so we're actually up today, 1.6 thousand. Well, let's see what's going to happen with the options when the market opens. This is about to change. $1,600, so this is only 14. Anyways, yeah, I have the ARKK. I have 100 shares, and I'm up on those. And then I have the leap. I'm down. The funny thing is, when I got those 50 shares of the FAS last week, I got 50 shares and then I got 2 leaps. The funny thing is, 50 shares are actually up 3.5%, and then the leaps are only up 0.78. Obviously wasn't timed very well, but on the other hand, I mean, could have timed it better, but on the other hand, buying shares there's nothing wrong with that. Apple, we're still down a lot. Let's see what's going on. The worst thing is ARKG for me. No, I take that back. It's ARKG and ARKW. I only have one contract of ARKW, so that's not a bad opportunity to dollar cost average into it. Oh, we'll see. We'll see. We will probably be doing that. Probably gonna go ahead and do that today. ARKW and ARKG, get another one. Something like that. We'll lower the cost basis quite a lot, and even the ARKW, I only have one contract. I could, it's not expensive. It's only $1,800. I could sell these 30 shares, the random 30 shares I have of ARKW, which is $4,300. Even though I'm going to take a loss on it, but I could sell those and then just pump that money into the ARKW leaps, and so that would drastically lower my cost basis on those. I'll consider doing it. We'll see. We'll see. But if it's 40, if it's more than 40%, then I would consider dollar cost averaging. So basically, it's going to be the. Oops. Basically, it's going to be the ARKW for me, ARKG probably, something like that. The Apple one is not that bad. It's only 34%. And the VAC-Q, it's even. Pershing is doing fine. It's only down. It's only ships commons. I'll hold it. Only 25 as well. Print down 12%. Not so bad. And anyways, not much else going on. Yeah, I mean that's pretty much it. I've got ARK positions right because I cut everything. Markets are open. I cut everything and just went into dollar cost average into ARK. Picked up the FAS, which wasn't that much money, only 50 shares. And then the Apple one we kept because that's a leap. Well, I guess technically it's not anymore. And that's basically it. That's all we did. These other little random ones, 6, 4, 6, whatever, 9. Those are from some free stock that I got. But... all right, looks like we're heading down a little bit. That's okay. Let's keep watching it. Oh yeah, everything just went red all of a sudden. Okay. Let's move on over to the 15-minute chart on the triple Q. So yeah, we had a nice little. We had in the free market. We had a nice little run up, if I do say so myself. Well, looks like some people are taking profits. You know. And looks like it just bounced off of the 50-day on the 15-minute. Anyways, see if that's going to hold. And let's go ahead and look at the 10-year. 10-year is 15.82, is that right? Guess so. And then I want to move over to Buzz, B-U-Z-Z, the social sentiment. This one, I want to buy. I'm buying at $23 if I can. I would like to get into this one. This one seems pretty interesting for myself. TQQQ is only down 2%. So we'll see if it holds up. Tesla has improved. Also had a nice little run up. So we'll see. The initial taking of the profits from that run up is going on right now. We'll see what it can hold. Let's see. Other than that, let's go ahead and reference the write-up. I don't know if you guys had a chance to read it today. And come on. Okay. Basically, I did a lot of fundamental technical analysis on the 10X, NASDAQ, and whatnot. But the ones that we might look at could be we could do an energy, an oil play, the FAS. If it dips, I'll buy more. I don't want to put too much money into it because that's more shorter midterm for me. But we'll see. Probably midterm, I would say. I guess it's just my opinions from my own ideas. And then some things that we could look at buying more of would be Tesla if you can. Could be interesting buy zone right now. The Buzz, which we already got. Well, we have a buy order in for right now. And then the SOXL and TECL, always interesting. They are pretty cheap. Also, the TQQQ is it bounced off of the 180 moving average on the day chart on Friday, so it could be interesting for you guys. And then, of course, all the ARKs, which is probably going to be my priority. And SPCX, which was the SPAC ETF. That's not going to be priority. And then the Roblox. Yeah, let's check on that next. Anything going on? No. Okay. How are things going? Dow is up a little bit. SPY is down a little bit. That SPAC ETF is only down 0.5. Triple Q is down 1%. All right. And then the semiconductors. Where's shaking my head? Oh, there's, yeah, 1.5, 1.8. Well, I would like to, hopefully we can pick up. Oh, they're dipping right now. Hopefully we can pick up a few. My priority is going to be on the ARKG, ARKW. And like that. The FAS if it dips. That's the battle. That is the battle plan. But yeah, basically last week what I did was put all of my shorter midterm positions and dollar cost average into my longer term or my lead. And don't have any regrets because things have gone down further. So it's probably the right decision. Probably was the right. Let's go ahead and pull up. Cute. Well, it's definitely pulling back. First 15 minutes of trading. I'm pretty anxious. See what's gonna happen. Anyways, what are you guys planning on doing? What do you guys got planned? Let me check in on the Twitter. If you guys are not already following me, please go ahead and do that. Follow me on Twitter while you're at it. And go ahead and like this video. It really does help me out. Helps me out a lot. Yes, like times like these, I am not so eager to get into position. I'm patient with my other positions and waiting to dollar cost average in. Let's go ahead and read some news. How about that? Read the good old market watch. I have a feeling that it will turn green again today. Let's see if I'll be right, like with Friday. Yeah. I mean, the funny thing is, I actually had that feeling too. I don't know if you guys saw in the Discord. I think it was. I mean, it wasn't too long ago. I was thinking it was going to turn around for some reason, because I see a lot of more people talking about online that they will buy tech. Like, if you watch these videos on YouTube with the talking heads commentating, and also some articles like we're about to read on Market Watch and whatnot, you see in the comment section that people are like, "Shut up! I'm gonna buy tech. Just buy the dip." Oh my god! Look at this headline. Okay, perfect. Tech stocks are selling off. Don't buy the dip. Sell the bounces, says strategy. Oh, looks like we have a picture of a trampoline. Nice. That is a big trampoline. Trying to tell us, is there going to be a big bounce? Gosh. Don't you? I have to click. Hope they don't paywall me. Tech stocks are selling off. Don't buy the dip. Sell the bounces. Yes, they paywall me. Probably for the best. They had a fire motorcycle last week, and now they got a bouncy trampoline. It's a huge one. Wow. What are you trying to say? Sell the bounces. Yes, I see. So that seems like what people just did. Maybe they just stopped reading Market Watch. Because we clearly was bounced up here. We had a nice little run up, and then people started selling the bounce. Dude, who wrote this article? Who knows? Who knows? Let's see. Wow, Dow's up 0.6%. S&P is up 0.27%. NASDAQ is almost breaking even. Take that, Market Watch. Get out of here with your fear mongering. These guys literally are fear mongers. They just want me to click on that, which worked. Sell the bounce. Yeah, keep that in mind. After an unseemingly stampede, the NASDAQ composite may be near the end of its correction. Oh yeah. Investors may have a buy signal as these big tech stocks have dropped up to 32% in only 3 weeks. Imagine that. Imagine that. Buying the dip is a good idea. Imagine when Tesla dropped 30 to 40% the last 2 times. Guess what happened next? It went up. guess what always happens? It goes up. 30% is no joke, guys. It has dropped quite a lot. And some of those small cap tech, there's even more. Rest in peace, Solo. ICLN, just the clean energy is getting smashed. Who would have thought it's opposite day? Literally. Who would have thought it's opposite day? Okay, we have a Democratic majority in everywhere. Entire country is blue now. Biden is non-stop talking about clean energy this, green energy that, do away with fossil fuels, protect the climate. Okay, Biden let me just go ahead and buy some ILCN, PBW, Reggie, buy all this good stuff. And guess what happens? Sells off. Pig slap in the face. It's opposite day. Guess what? Southwest Airlines hasn't had a customer in like 9 months. For some reason, their stock is going up. Stock futures lower as rising bond yields keep pressure on tech shares. Speaking of which, meme stocks up. Haha, yeah, it's easy to trade the bounce. It's just time everything correctly. You don't even need to time it. Well, I guess you could, but you could always dollar cost average bounces. Who said you only dollar cost average buying? You can dollar cost average selling, and I would highly recommend that. But that's basically why I always say take your profits at 25, 50, 100. Basically means we're dollar cost averaging out of it too. But man, sell the bounces. That's funny. You're shorting those things. Eventually, you're gonna get wrecked. You better have a stop loss set, because one of those times it's gonna keep going. Right? The stock market is made that the stocks can always go up. So I mean, there's no ceiling for any of these stocks. It doesn't matter. Fundamentals or hype, technicals, whatever. Not necessarily any ceiling. Well, let's continue. Oof. Yeah, I read that wrong at first. My bad. You're making fun of it, so was I. These articles are silly. Oh, how about that bounce for you? Sell that bounce. Market watch. Triple Q is 309 right now. Take that. Market watch. Oh my god, Amazon is showing signs of life. It's up 1.75. I bet you that Buzz is doing pretty good, because I think one of the top holdings was Amazon. I don't remember if it was 1, 2, or 3, but it was up there. Maybe it was top 5. I don't remember. But hey, it could be interesting. What's going on? Wow, a lot of green. Semis are breaking even. Nasdaq is up 0.2. S&P is up 0.6. Dow is up almost 0.8. ARKs are up more than 1. ARKK, ARKW, ARKG. Buzz is up 1.5. What? But we didn't. Our limit order didn't even get hit. I had a feeling that one would do decent. Just look at the holdings. DraftKings, Amazon, Facebook, Alphabet. I think it had American Airlines. I don't remember. Maybe I'm getting the Buzz mixed up with the OGIG. Which, where's OGIG? It's probably doing good too. OGIG? It's down. Okay, never mind. Not doing so good. But OGIG, the spark line is going up. Okay. So this feels a little bit better, but it's about to correct, I'm sure. I'm pretty sure some things are already correcting. That just went up pretty fast. Literally within like 5-6 minutes. Just turned around. So good news. I never would have guessed that my STLA shares would be my best performers the last. Sorry? STLA? Atlantis? What is this? Automobiles and Consumer cyclicals. Oh, automobiles and auto parts. Fun. Oh, it's from the Netherlands. Exciting business. Steel parts. Eyes is flying high today. True, huh? Also not really surprised about that one. I probably should add that to my... Actually, I was thinking about it, but... 100%. Yeah, I was thinking about it, but I didn't. It's all good. Oh yeah, they just got something. Oh man, what was it? The catalyst was... It got something approved by the... Yeah, maybe I'm mixing up TRXC. TRXC, I know that they did. They did get FDA approval on something. Nano is up 11%. That's really good though. SOX falling a little bit. Yeah, things are pulling back just a tad. That's okay. See what's going on though. Look at the 3X real quick. Yeah, the FAS is the best of my bull ETFs. Oil ones have pulled back. Dow bull and FAS bull is better than the oils and energy. Actually, the S&P bull is also better than GUSH. Triple Q is closing in on it. SOXL is still down 1%. I don't have any FNGU. That one is a little bit too undiversified for me. But I watch it though. And then go to all stocks. What is the best? Nano. Nano was the leader, GEVO. Then GameStop. Then XPEV. Wow. Ace is up 6%. Workhorse is up 4%. Solo is up 4, almost 4. 3, almost, yeah, almost 4. Lee is up 3. What about Tesla? Tesla's up 2.3. Hooray! DraftKings too. Yeah, that Buzz one is looking pretty good now, huh? Oh yeah, that's right. I wanted to get some more iPods. So cheap. Yeah, it's good news. So yeah, I wanted to get some of this iPod because this is the Chamath pack, which it's very, very cheap right now. But as soon as there's an announcement and they target a company to merge with, I mean, this will go up for sure. It's back at IPO levels. Internet. On Chinese internet. Okay. Yeah, so it's bouncing too. That looks similar to what's going on with the entire market right now. Like that TQQQ hit that 180-day moving average and bounce right off of it. Like those big market watch trampolines. But anyways, I'm thinking about getting it. I mean, if you check it out, they IPO'd it. 1051. Well, I don't know if it. No, it IPO'd it. Turn the start setting back to linear. Okay. It IPO'd at about 11 something, I think. Start of that candle was like 11.26. So it was like $1 away. Yeah. So could be good. I don't wanna. I don't know. I don't want to spend so much money on it, but kind of, you know what I mean? Kind of, I spent so much money dollar cost average. I mean, everybody did. We spent so much money dollar cost averaging we would at least like to see a couple of days of maybe consider taking a little bit of profits and switch some things around into some of these more risky mid to short-term plays. But ICLN, yeah, I bet you they're cheap. Forehead, I'm loving NNDM. I know, right? I want this. Good for you. Got it on sale on Friday. Okay. Good for you. Upgrade to options 3. Nothing interesting going on right now. For all we know, it best case scenario could be flat for a few days. So yeah, the ICLN is disappointing. I mean, it's just opposite day. It really is opposite day. It's crazy, but it's just crazy. I mean, check this out though. I just pull up my chart so I don't have to my article. So look at this. Can I make this bigger? Can you guys see this? Okay. So anyways, so what we are looking at is this candlestick chart is the 10-year treasury yield. So as you, and this is on a oh, this is since 2019, beginning of 2019. So 2 years. All right, yep. So in here was the March dip, and then we were flat, and then leading up into current date. Okay, so that's the 10-year, and it's only in 2 years. Now look at the, and then I overlaid the triple Q, which is tech heavy NASDAQ, on top of this that we can see. So when the TNX was declining here, the triple Q went up. When the TNX was actually slightly going up, but mostly flat, the triple Q went up a lot steeper. And then when both of them went down here, both of them at the same time went down here. And then, yes, of course, tech and NASDAQ went up quite a lot. And to be honest with you, the 10-year actually kind of also went up at the same time. And just all of a sudden, we are at this drop on the NASDAQ. And it's going up at a little bit steeper, a steeper rate than it was before. And, you know, we're down here. So all of these points in the last 2 years were all different. I don't find any correlation. How do you find a correlation between the rising 10 years and a falling NASDAQ? But actually, both of them fell here. Both of them rose here. Both of them rose here. And then even at this part that they fell, this is, remember, this was almost the same. The NASDAQ fell here. That had nothing to do. I mean, obviously, that had nothing to do with rising, but we're rising at that time. And it's not like they haven't been rising. But of course, all of a sudden, there's a lot of fear, a lot of talk about a bubble. But as far as everybody saying, you know, people are scared, people want to sell, take profits, there's nothing wrong with that. We've been on an excellent bull run. And it makes sense to switch back into the more recovery plays. It makes sense to me to get some financial sector which could benefit from the rising bond yields. Fargo and JP Morgan and Bank of America. I mean, that makes sense. Higher interest rates, I guess. Right? And yeah, I mean the tourism industry and travel, yeah, it makes sense. The economy's opening up, more people are going to be moving around. Makes sense. But what doesn't really make sense to me is that people are trying to stick this on tech, and people are panicking even more. So I'm not the, you know, I don't pretend like I know everything, and this one is one of the ones I don't really understand, because people are saying that they, oh well, they if these companies, tech companies, if they need more working capital, it's going to be more expensive to borrow it. Right, that's true. Although it's not that much more expensive. And are those companies really doing that, or are they just selling shares to raise the equity, to raise the capital? Which that's what they do a lot. And that was actually a big talk around GameStop as well. Just an example everybody knows. Once the price went up so much, they were like, well, why don't they make a share offering, sell some of the shares at the higher price, take the money, and then reinvest it into switching to the online e-commerce for GameStop and whatnot, which was a great idea, in my opinion. So, it's not like, okay, well, GameStop's just going to go out and borrow a bunch of money to do those things. I mean, obviously some companies do, some companies don't, but my point is they're just pegging all of this falling tech and the rising interest rates and saying it's correlated. But actually, if you go back here, and this is, I just took a screenshot of 2 years, but actually if you do this and you go back 10, 20 years, you can't really say that there is a concrete evidence of a correlation. And again, I don't know everything, but just my opinion. Anyways, let's look at the markets. Markets have been open for half an hour. iPod is up 2.3. What are we looking at? Oof, that's a lot of green. Okay. Okay, so yeah, the 10-year is actually, it is up 2.5%. It's about 1.6% interest now. Oh, EBW is making some moves. Dow is still up a little bit, but yeah, things have pulled back since the last time we checked on the spark line here. S&P is almost back at break even, but that's okay. Things are going to be a little bit choppy. We'll see where all this averages out at. Triple Q is down a little bit now. And what happened to all the ARKs? Okay, yeah, they're back down. SOXL also is down 1% all of a sudden. Oh, sorry, SOXX, the SOX. But yeah, there we go. The 10-year goes up, and everything else goes down. Go figure. Okay. S&P bulls are looking okay. Dow bulls looking fine. Energy is down. Oil down almost 2%. Interesting. Actually, the financial sector one is doing all right. It's up 2.4%. Energy ones are down. Interesting. Well, see, that kind of makes sense because oil not necessarily. What's oil got to do with the rising bond yields? Financial sector for sure. JP Morgan and Chase and Wells Fargo and whatnot. Makes sense to me. But for sure, oil is going up. No doubt about that. As of late. Okay, well, let's let things bounce around a little bit. See what else is good. Hope everybody is having fun trading, and I appreciate you guys joining. If you're not already subscribed to that blog that we were just looking at, go ahead and do that because I hope it's interesting for you guys to read. I mean, I think so far it's probably not bad. But yeah, in the latest article, we talked about the length of the slope of decline for the September dip and the current dip. And then also, I was thinking, okay, so the March panic was here. And then some people sold here. There were people selling at the very bottom, and we don't want to be those people. So I think it is a time to buy. Of course, don't buy everything right now, but dollar cost average. And if you cannot afford the dollar cost average into a couple $1,000 contracts of leaps, each contract costs a couple $1,000, then you can always do shares. There's nothing wrong with it. Even my FAS leap is not even making as much as just the 50 shares that I bought. So 10-year, yeah, I expect it'll move to 2% because that's trading right. That's on the month chart. I expect it to probably go back to 2%. But the question is, when is this going to be priced in? The fear is we'll eventually get priced in before the interest rates stop going up. That's what I speculate, at least. I mean, it's like that for almost everything in the stock market because the stock market is only forward thinking. Anyways, reminds me, how's Buzz doing? Buzz is doing all right. 2370. Almost back down to open. Dividend one, OUSA. SPAC one is up 0.25. SPAC ETF. That's 10. Realistically, how much money would you want to put in a SPAC ETF? You know what I mean? Well, it's time. It's time to dollar cost average. The ARKW. $18.6. See if we can get it. We could try lower, but it's just gonna really help my cost basis, so pretty happy about that. Let's just go ahead and place that for one, see if it hits. I could get another one. We'll see though. Okay, I'm gonna go ahead and throw that in there for 18.6, and this is the $160 strike, 17th of December 2021. All right, that one is off, and away. Okay, that already filled at 1820. Very nice. Keep that in mind. You guys might want to even put in $18. Let me just go ahead and get this posted on Twitter. Okie dokie. Oh, you guys didn't even see that, huh? Good. All right, and then what is the next order of business? So what did that decrease my basis to? Well, that decreased my basis by a lot. It was like more than 41. Yeah, almost negative like 54%. Now I took it down to only minus 37. So definitely useful to dollar cost average. So that's good. Do another one. Pretty cheap right now, right? Do an ARKG. Already have 4 of those, but pretty cheap. Create a new order. Let's get it in for 12.9. See what we can get. All right. Got an ARKG going in. And that filled at 12.9. Oof. Okay, so I'm down to negative 42% off. Is that right? I'll check. Yep. So that's good. Okay. Wait a minute. Was that 12.9 or was that 11? ARKG. Did I mean to do 11.9? Oh, man. Maybe I did. Or maybe it just dropped. I don't know. I don't know what just happened. But it was either used to be 12.95 or 11.95. I'd have to go back in the footage to see that. It's a good thing I'm recording everything. It either dropped really fast, or as soon as I did that, it dropped $1. Or I put in 12.95 and I should have put in 11.95. But anyways, it is what it is. Still lowered our average a lot. And we can get another one. That one was pretty cheap too. What about the ARKF? The ARKF is not even that bad. Apple is worse, to be honest with you. And the FAS, okay, the leap is finally up. So overall, I'm up 10, 4, 5% on these. More, maybe like 5.5% totally on the FAS, which is cool. VACQ Pershing, I don't want to dollar cost average down on that now. But to tell you the truth about the buzz. Always got the iPod. Yeah. Well, let's see if it comes back down because we've got these orders in right now. 4 buzz anyways. SPAC ETF is breaking even. Doesn't look bad. Let's do a quick Google search about this. SPCX holdings. See what we can find. SPCX. Okay, let's see. The top one is Starboard Value Acquisition. Cohen Robbins Holdings. H. Zach. Oh, hey. Hi, Zach. Yeah. There is a lot. God, that would take an enormous amount of time to research. That would take an incredible amount of time to research. Just imagine that. Researching a lot. Yeah. I didn't see the iPod though. That's what I was kind of looking for. Well, it's definitely interesting. The dynamic and evolving nature of the burgeoning SPAC market demands an equally dynamic and agile approach to managing a broad portfolio of SPACs. This is no place for an index fund. Such a strategy has traditionally been offered only to institutional level investors. Until now, introducing the SPAC and new issue ETF, the first actively managed SPAC exchange traded fund. I mean, that sounds pretty nice to me. To be fair, I don't have enough time to research all of those things. That takes an immense amount of time to research, and I mean, you want to invest in SPACs, you want to get exposure to SPACs, but you don't really want to, I don't want to spend so much time researching all of those. And if I only pick 3, 4, 5, 6, 7 that I do have time to research, that's not very diversified. So, kind of like this idea. Maybe we should just hang it up, call it quits on the SPACs. Just go buy some shares of SPCX. I mean, if we're in a bull market, this is going to print. Depending on the management, though, really, that's going to be pretty key. All right, let's check back into the markets. Things bouncing back. Buzz, Dow is up. ARKG is actually up. Okay. I is up 0.5%. Oh yeah, things are bouncing up. All across, all the sparkle lines are bouncing up. Triple Q is almost breaking even. I mean, I'm basically, you know what I mean? I'm just feeling like just go to sleep right now and wake up I was about to say 10 hours. Yeah, get real sleep 10 hours. Wake up 6 hours later and then just see all green. You know what I mean? That would be nice. But yeah, I mean, we got into couple. We only got into the call it build. Well, we got the we got both. That's right. I feel like that was some stuff right there, but I could be wrong. Probably I am wrong. I really would like to sell some things off. Really want to take things, but there's just nothing to take profit on. If the ARKW did bounce up, I would sell it to even break even on it, and then switch this $5,000 or so dollars. 40 probably at that point. It'd probably be 47, 48. Yeah, it'd be 4,800. Switch that into more ARKW leaps, or maybe just split it between the ARK leaps. You know, I got $10,000 in the FAS financial sector, which is fine. These XLK puts are not paying. I could get rid of those if I could even get rid of those. I can't. See if there's a level 2. Yeah, there's nobody is even bidding on these. That's too bad, because when I was looking at buying those, I saw that they had demand for them, but then for some reason the market just tanked and all of a sudden there's no demand for them, which is weird. That's also like opposite day to me. Anyways, so what other ARK ETF is down right now? What is the worst one? The worst one is actually ARKK. Let me guess. No, ARKF. ARKF, then ARKQ, and then ARKK. ARKQ, I don't even think I have any positions. Maybe I do. Yeah, I do. I have 150 shares. I don't have any options though. I could also get options on this. I could switch all of this money to leaps. Well, they don't have leaps, but they have the longest term we could do. Yeah, I mean, it's the market value is almost $12,000. I could just get rid of those for now. I'd sell all these free stocks and get a few $100s, I guess. I don't know. I'm tempted though, because anyways, $12,000, we could put this into leaps. Not leaps, but it's 193 days is the most. So that's also I kind of like, don't really like that, but we could get a delta of, we could even get a delta, crazy high. Well, we could do a 65 delta, let's just say. That would cost us 1,300, and so if we had about 12 divided, I don't know, maybe we could get it for 1,300 right now. 9 contracts, and we'd have a little bit of change left over. Don't even need 9 contracts to be fair. I could save some money. I could only get like 4 maybe, or even just get 2 and start dollar cost averaging into them. Definitely something to think about to save a little bit of money. Anyways, it's hard to say. FAS is doing great. Dow Jones is doing pretty good. S&P is not doing bad. Just waiting on the NASDAQ to come on. The energy one is really going down. It's down 2%. And then GUSH is down 4. Oh man. That's interesting turn of events. Interesting turn of events. Well, turn to Market Watch. See what the talking heads have to say. Whatever happened to selling the bounce? Oh, they removed it. Where's your trampoline? It's gone. Kidding me? Where are you? It must be somewhere here. Where's the trampoline? Where's the Market Watch trampoline? Huh. Interesting. Mark Cuban's Dallas Mavericks acceptance of Dogecoin sparks crypto debate. Dogecoin. Kidding me? That's cool. Cool. Dogecoin. Beauty app outfit. Oil services company follow Tesla and MicroStrategy, pouring millions into cryptocurrency. Bitcoin is an extreme form of libertarian anarchism, warns fund manager. Okay, well, thanks for the warning. Thanks for the warning. You're just mad you didn't buy it. Probably you did buy it. It's down. Oh, here's the bounce thing right here. Tech stocks are selling off. Don't buy the dip, sell the bounce. Strategist said. I mean, that would be super useful 2 weeks ago. Even 10 days ago. 10 days ago would have still been useful. 10 days ago, it still would have been useful. 3 trading days ago, it still would have been useful. But now, not really useful so far. Probably as soon as I say that, it's just going to start going down, isn't it? Seriously, I really got to be careful with these superstitious things. Anyways, Dow posts early gain, but Nasdaq suffers as bond yields unsettle tech investors. Yeah. Bond yields are unsettling tech investors. That is a correct statement. But why the bond yields are unsettling tech investors, beside the fact in the entire internet is talking about tech is going to suffer if bond yields go up. But I don't know. I think there would be a better there would be more logic behind the transition into cyclicals and recovery stocks because of the economy opening up. But then I guess you could make the argument, well, the economy is starting to open up and return to normal. Well, it is opening up, therefore it's returning to quote unquote normal levels. Therefore, the underperforming cyclicals are doing well. So the bond yields go up. I don't know. I don't know. I'm trying to rationalize. But it makes sense to me that it would be the recovery economy. The cyclicals that have underperformed. Money managers are transitioning into tech, which are really high anyway, so they're taking in profits, which makes sense. And they're going into the cyclicals. I don't necessarily want to do that, but it makes sense why people are doing that. But as far as the bond yields, like, I just can't, I don't know. Maybe I'm not smart enough to understand. I don't know. Well, let's check the Discord. Mr. Snoot says, I don't even know what to DCA into first. Tesla, Apple, Baba, Roku, too many decisions. Well, hey, Mr. Snoots, if there's too many decisions, how about just get an ETF and make that decision for you? So if you want to do Tesla, Apple, Baba, Roku, you could try ARKK. You could try OGIG. I think those, yeah, OGIG might fit. Let me just reply. I think it's OGIG, right? Is okay. Let me look more into the news. Stock. Let's see what people have to say. Stocks waver as bond yields rise. Are they wavering? I don't know. Dow is up 3%. Or sorry, the bull. I'm looking at the bull. Buzz is up 1%. That's pretty good. Dow is up 1%. ARKK is up 1%. What else? Clean energy looks like it's moving up. S&P is up 0.75. ARKW is up. NASDAQ is up 0.2. ARKK is almost breaking even now. Coming up from down 1%. Semis are not doing as well. That's okay. They're on the way up. They're on the way. Yeah. So, okay. Stocks waver as bond yields rise. All right. Obviously, they're not writing this in real time, but it wasn't so bad today. We've seen worse. We've seen a lot worse. Dow rises 200 points amid David Tepper's bullish comments. Stimulus optimism. 16 hours ago. 16 hours ago. Wasn't even open at that point. How did the Dow rise 16 hours ago? Click on this. See what's going on here. Let's see what's going on. Wait a minute, this just changed. Dow jumps 300 points as Senate passes stimulus, beat up tech stocks, fight into the green. You know, that's the thing. I was wondering about that because this weekend we saw the stimulus passed. Well, the last two times, right? The last 2 times they passed the stimulus, stocks did go up a lot. And Friday they were pretty much knew they were going to pass it. It's just a matter of when. They had to pull an all-nighter. I read an article. Oh, I need to allow ads. Oh, it's okay. I can do that. Got your back. I got your back. I'm just gonna allow it once though. Okay. U.S. stocks climbed on Monday amid progress on a new COVID stimulus package, while tech shares with lofty valuations that got hit hard by rising yields staged a comeback. Okay, let's see what this dude has to say. Tepper. Basically, I think rates have temporarily made the most of the move and should be more stable in the next few months, which makes it safer to be in stocks for now. Okay. Thank you for the kind of positive comment. Which makes it safer to be in stocks for now. It was very dangerous. There was a lot of blood in the streets the last 2 weeks. Do we agree with that? I think that the bond yield is what, it's like 1.6 right now? Yeah, pecking on 1.6. And a lot of people saying it's going to 2 though. So still like 20% up. But yeah, I mean he totally could be right. Hopefully he's right. But of course, even if it does go up another 20%, the bond yield, that is, I think that the fear could be priced in. Eventually, Tesla, Google, Apple, these huge companies that have revolutionized and made a huge impact on the last decade of our lives. Eventually, there will come a point where majority of people think that these are pretty cheap. Let's buy them. Eventually, there will come a point, and we don't know when that's going to be. But get past this fear in the markets. That's the first step. Even if these bond yields kept going up, because they don't necessarily, there's not necessarily a correlation, in my opinion, between the NASDAQ tech and the TNX. But I might be wrong about that. Just for my small brain, I don't feel like there's much of a correlation. I feel like people are just scared. So they're trying to find something. And I think that Powell is doing the right thing by doing nothing. People are just, and I think that's pretty much what he said without really saying it. He's not going to do anything. It's fine. It's healthy. It's could be the inflation and the rates could go up a decent amount right now. If we just look at it on, what did he say, like on a month-to-month basis, but eventually it will average out to around 2%, which is healthy. That's what he said. The inflation, that is, at 2%. So it could spike up a lot, and people might get some jitter bugs, some butterflies, but it'll be fine. Should come back down to 2%, average out the next rest of this year. Biden is expected to sign the stimulus on March 14th. Expected to sign it into law before unemployment aid programs expire on March 14th. I'm sure he will. Disney is up. We see higher rates largely as a function of earlier and stronger than expected economic recovery and supportive of our position equity outlook. JP Morgan's chief U.S. equity strategist said in a note. Who's he writing the note to? Passing some notes. So I think that it's all his good stuff, and I mean, the point of the Fed speech when Jerome Powell was talking about that, and if you think about it, what that means is we're doing better than expected. We're definitely on the right track. Everything is okay, and there's no need for government intervention. But dang, those rising bond yields really make people antsy and want to sell their tech stocks. Dow jumps 350 points. Yeah, boy. Thought it was 300. They just updated that. Ooh. Did they change the name in this article too? Not yet. Let's see if we refreshed it. Oh, they did. That's funny. I wonder who's sitting there watching the Dow update title. The higher we can make this number, the more clicks we're gonna get. Disney shares added 3%. That's so funny. That literally used to say 2%. The bull market continues to be under the hood, with value and cyclicals leading the way. Growth stocks can rejoin the party once the valuation correction and repositioning is finished. Yeah, for sure. I mean, that's literally probably one of the better articles, most reasonable articles. No fiery motorcycles, no ginormous trampolines, just stating facts. That's cool. And they obviously care about updating it, because they updated it while we were reading it, so that's cool. So yeah, but those are pretty much things kind of new though, wasn't it? I think they probably worded that some of those things better than I did in my articles, but it's the same gist though. Just everybody chill. The growth is gonna be fine once everybody calms down and this transition, quote unquote, period from tech to cyclicals is over, and then the money will flow back into the growth, because eventually we'll come to a point where everything is gonna be like, wow, that's Apple is pretty cheap right now. They're not slowing down selling the iPhones, but they're pretty cheap. But eventually we'll come to a point. And also same for Tesla. A lot of people are starting to talk about like, oh man, should I buy Tesla now? It's so cheap. There will come a point, because this is not a crash. Hey Darth Molly, what's up, man? Good morning. No problems being late. What was I gonna say? Lost my train of thought. But anyways, so that's why I never was really so concerned about it, because like and I mean, I say that and it could just totally go in the toilet tomorrow, or like right now. Let me just go ahead and check that before I keep talking here. Buzz is up 1.3, ARKG is up 1.7. Yeah, we're still on the way up. SOXL is better. So yeah, I mean, I wasn't like, I never panic sold. I did pick up those hedges, although to be fair, it didn't really work out. Not enough volume for the ones I got. But hindsight is 2020 on those, so I'll keep those hedges till whenever I can, I guess. sell them for something. We'll see. But yeah, I mean, I got some hedges, so we got into the FAS a little bit. Well, it was $10,000. It's a decent amount. Made a little bit on it, about 5-6% last time I checked. It's still doing pretty good, actually. The oil is not. So I was kind of right about the oil. Not really interested in getting into oil because, man, the oil is that it can go up for a long while, but also it can start going down too. So I'm not a really big fan of oil, and also that should be one of the most disrupted in sectors. Should be energy going forward in the future. So I'm not really so into it. I mean, the second sector I would say would be financials. That would be disrupted, but not as much as oil, I think, because we're still gonna have banks. Like, for example, the FAS, the top 10 holdings, it's got like, I think Berkshire Hathaway was one. I think JP Morgan, Wells Fargo, Bank of America. I mean, these are, I mean, for sure, the financial sector with the new fintech, the digital wallets, blockchain, for sure it will be disrupted to some extent, but we're not going to not have banks anytime soon. So I thought that one was better than the oil play because that one seemed to me like it would be correlated with the rising bond yields. Banks, right? So that was my thought. But the oil is not over. It's dipping right now. So if you're still bullish on oil, you buy it right now. That's as simple as that. And it's not necessarily a bad idea. Not for me though, because oil will probably continue to keep going up. There's no reason that I see it would turn around today, but it is down today though. So it could be an excellent time to jump into the GUSH or the ERX. But again, it's not for me. I'm trying to get the disruptive technologies, the medium size, a medium sized chunk of my portfolio go into disruptive stocks and innovation and growth, like high growth, medium sized chunk, and then the biggest chunk is just going to be straight Dow, S&P, Nasdaq ETF, semiconductor ETF, and tech ETF. That's the biggest chunk. But then, as you can see, with all the ARK holdings I have, it's a medium-sized chunk in the growth and innovation and disrupting technology. But then the rest would just be some wheel strategy, short-term, mid-term calls, things like that. But so far, right now, I cut all those. Jumped into SOXL today. Congratulations, Gary Baker. It probably feels good to be jumping into that one. Even with this dip, it's still up like 700% since the March dip. So, and before this dip, it was up like 1,000%, 1,100%. I mean, just pretty crazy, and that's less than a year, just a 10x possible. And that's crazy. But semiconductors are in shortage, so it makes sense. How would you not be doing that if you're scared of the 3x bull? So go with the SOXL. That thing, I've seen it bounce up 3-4% per day on a good day. So it's not like it's not making money. Nasdaq is the only thing down on the ETF is that battery one. Lithium. Well, it's not a battery, it's lithium. Semis are struggling, but anyways, how's my O doing? Wow, going up a lot. See, there's just no correlation because when the tech and everything was dropping, when the bond yields were going up, we saw, okay, like, well, it's not a bad hedge getting into the O. I don't know if you guys were on the stream at that point. We talked about it, and I actually bought some. I bought 100 shares, not that much. I think last Thursday, maybe, I forgot. But you know, because things were going down. I was like, oh man, even I remember I said a few times, I think I was like, oh, days like these, it just makes me want to take my entire portfolio and just, oh, because hey, steady goes up a little bit and I get dividends. But yeah, obviously I'm not gonna do that. It's a decent hedge. But now it's up 1.3%. You know, the tech is up 1.3%. The TNX is only up 2%, which is it's coming down. The TNX is coming down right now. But still it's up 2%. But see, TNX is up 2%. But so is clean energy. They're both up 2% today. So shouldn't the TNX be up 2% and then the clean energy be down 2%? Like if it was correlated, ARKK is up almost 2%. Shouldn't that be down today if they were correlated? NASDAQ is up 0.3 and TNX is up 2%. So I don't know. The SPCX is pretty interesting. What else do we want to do? Probably get an SPCX. I'm tempted, but I don't want to spend so much money right now. I'm more interested in that buzz, to be honest with you. It's up 1.4%. Should just market bought it, but whatever. We're gonna. I wonder if that's TIF GTC. Take it. Modify it. It's only good for the day. Okay. So modify this to GTC is good till canceled. TIF is time and force. So if you guys don't know, if it's day, then it'll automatically cancel, and if it's good till canceled, then it won't automatically. So I actually want to just keep that because I would, whenever it goes down, I don't want to forget about it. So go ahead and modify that. Yep. Okay. Done that. And then the next one I'm looking at is the SPCX, to be honest with you. Flat right now. Could be interesting. So let me just go ahead and put an order in at 29, I would say. 50 shares. Let's do a bit smaller here. That one could probably be pretty creepy. What's this order? What's that one? Let me do that real quick. And then I'm not making any purchases yet. Tomorrow's the day for me if it will in green. It's a good idea. I mean, that was the same for me on Friday. Friday was green, but actually I didn't buy anything. And I'm waiting until today and just buying a little bit more. It's a great idea. You shouldn't really dollar cost average every single day. I mean, if you're only doing it with $50, $100, not that much, relatively small amount of what you have available to dollar cost average, then it's fine. But really, there's no need, especially when we're talking about leap contracts, which are going for a few $1,000s each, $1,000 to $2,000 to $3,000 each. You're gonna run out of money fast, so I think that's the right decision. There's no wrong in missing the very, 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 very bottom. Let's say if this, let's just use this one I have on the screen for an example, but let me just order and get it sent, this SPCX order. So let's use this example. If that was the very, 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 very bottom, 28.67, we can't time that. So if we wait, even if we bind it up here and it's on the way up, we're still going to capture huge profits on the way up. So there's no shame doing that, and I personally like that strategy. So the SPCX one is going to be a little bit more risky right now because that is a SPAC and we're buying SPACs in the middle of a dip. So be a little bit careful with that one. And hey, there is only 25 shares and we can, and it's not options, it's shares. So we could get a, we could capture a decent amount of profits if it is the bottom-ish. And if it is not, then we only got 25 shares, so we can afford to dollar cost average down if we need to. I think this is a decent idea. Tech is up. Semis are still struggling. Things seem to be pulling back a little bit. My portfolio is up 1%. Not the best, but it's okay. My options are doing fine. Very good. Wonder why that is. Most things are going up. My FAS leap is up almost 10%. Is it because Tesla? No, because I don't have any Tesla. Oh, cool. Tesla's up. Well, it must be because of something. So this isn't interesting. Because it was Thursday and Friday. Seemed like it might have been the bottom. It's too early to say, but I want to have some hopeful thinking. Too early to say. Don't want to say it. But let's look at more. I mean, it's the similar story around all the graphs. It was this day, which was the 5th, which was Friday. Friday, and then it came up a little bit. I think that's right. Yeah, Nano's printing money right now. Buzz is doing pretty good though, but that doesn't surprise me. It should be doing good. It doesn't have any oil things in it. It has recovery plays and it has tech plays. I actually kind of like it. And it's not some small companies that we don't know. Everything we know. We know these companies. We trust these companies. So the question is the management. But this is Van Eck Vectors. Yeah, it's not like random thing that I never heard of, like the SPAC ETF. But it doesn't mean the SPAC ETF is bad. Workhorse is up 6%. Xiaopeng is up almost 4%. Oh. Well, that's probably good because that one got beat down. Caribbean Eyes is up 100%. BES was suspended. That's... Why did they suspend those things anyway? Just let it run. Let it run to 1 million. Good day for GEVO. Sold a covered call too early though. Nice. Been a while since I messed with those covered calls and wheel strategy. I cut all that. All good though. I don't want to get back into it. It's just like next list. Wait for a green day, 2 green days, and then start doing some interesting things. That's how it is for me. Let's just wait. I don't want to be fooled in a bull trap and get into more Costco Jumia like I did last week, and then had to cut those and activate Titanic Jack and Rose mode again. So yeah, I don't really want to be in that situation again. So I'm gonna wait. But overall, it's looking pretty good. The TNX is up 2.25%, but it's not up that much, and other things are up more. Really, the worst thing for me is just semiconductors, and it's not that bad. SOXL is down 1.28, but it's coming up, so it's a good time to get in it. And if this is the and a really big if this was the bottom. Okay, GUSH is actually coming back up now that we're talking. Okay, that's cool. So I guess buying it would be interesting then. Not for me though. But yeah, I mean, SOXL not doing very well, but doing okay. I have faith. You know, it took 3 days to get down that low. It could take 3 days to get up that high again, which it probably won't because going down is a lot faster than going up. But still though, you never know. So I have good feelings about it. But yeah, the Gush is moving though. It's a one red day, but it's nothing major. I don't think that, you know, even if it dropped down to here, then it would be interesting to buy, just like it did here. Right? That would be pretty interesting to buy at around 76, $10 down. Not necessarily going to do that. But I want to keep an eye on this one for sure. See how it goes. Oh, my FAS is up. That's cool. And then it is, those leaps are up, and my commons are up 6%. I bought it. That's good. Don't really want to buy more of those. No, I don't. If I can get more buzz, well, not more buzz. I have buzz. Get it cheap. But if I can get the buzz and then the spacky, call it a day, call it a week maybe. Just ride this out. I've already got a lot in here, and then if I need a dollar cost average more on some of these arc leaps, I don't want to be throwing money around too loosely. Shorter term plays, not just yet. But that's my strategy, guys. Yeah, below 20K, I mean, that's when you really, 20K is a good level. 20K is not, 20K is definitely has its big advantage in, because you can diversify. Get into some, oh, what you call ETF leaps. And then you can get your diversification, but 20,000, you still have enough money to be able to afford a few different sectors of the ETFs. Clean energy, renewable energy, 420, tech, go in a S&P, and still have money left over to do other interesting things with. Like wheel in it, like vertical spreads, calls, puts, whatever you want. Still have enough money. Good stuff though. All right, let's check and see what all the other stocks are doing that I've on my watch list here. The winner is GameStop. GameStop and then GEVO though. GEVO is printing 17% today. Very good. Fun is also up. We called that out a long time ago. Nano, printing, AMC, ACTC. Okay. Okay. Interesting. Solo is up almost 6. Very nice. Space is up 5. Ford is up 4. DraftKings is doing well. IDEX is doing well. LE, Xiaopeng, Disney. Everything's doing pretty good. Oh, no. Yeah, those oil stocks took a dive there. Gosh. Lemonade is hanging in there. iPods, iPo. I'm breaking even right now. Oh, looks like the Nasdaq is actually falling. Shaking my head. Oh, Gush. Yeah, Gush is making. Apple is down 2%. Yeah, that's probably why my options overall. Indoor. CCI. That could be a very good one to buy. You could look into the OGIG. probably has Baidu in it. Definitely has Tencent and Pinduoduo and JD. Those are all down a lot. Xing is also down. I don't know. Yeah, we're still having some mixed emotions. Most is green. Some things are pulling back a bit, including the S&P and ARK. Nasdaq is down 0.2 now, but that's okay. Because if we look at this trend, let's go down. On the SMA. Overall, we're going up. So it's going to go up and down and up and down and up. So hopefully it can keep that. I think that's what's going on across the market right now. People are selling those bounces like the Market Watch trampolines. The TNX is going down actually. It's less than 2% now. Last time I checked, it was 2.25% up. It was almost 1.6%. Now it's 1.585. So yeah. Been open for almost an hour and a half. And it's looking promising. I don't expect all that much. But I do hope the semis can start improving a little bit. So we'll see. And tech is not really going to be expected to do all that good. But if tech can be more or less even for a few days, I'm going to be pretty happy about that because we still have this interest rate thing. The bond yields, I mean. So anyways. Did you already discuss PayPal acquiring Curve and what, if anything, that might mean? No, I did not discuss this. Passive buy order on Workhorse just now. That Queen Kathy? Possibly. Is SOXL in the right buy zone right now? It seems like it's still going down. Yeah, it's still going down. So that means we should probably dollar cost average in on it. Should be down 3%. Yep. Right. But this is on the 1 minute chart. I mean, if we can hold this, it's still trending up for the day though. So then the goal would be to finish up here. 33 plus dollars. If we could see that, that would be amazing. So we'll see, and it seems like it is bouncing on this. And this is a support at 1 minute. Is not anything to be desired. But here's the 5 minute. So I mean, that's the goal. Seems like it is bouncing on it. Okay, let's do the PayPal. Yeah. Go to the day chart. So it's got some sort of support going on right now. From a long time ago that I drew. That's from the Corona dip. The first time it bounced. And then in the run up to the election, it found that support. And it seems to be finding it again. But it is down almost 1%. market war. PayPal to acquire Curve as it bolsters crypto ambitions. Yeah. PayPal Holdings announced Monday morning that it plans to acquire Curve, an Israel-based maker of cloud infrastructure for digital asset security. Terms of the deal weren't disclosed. PayPal expects that the Curve deal will enable it to accelerate and expand its initiatives to support cryptocurrencies and digital assets. The company said in a release, PayPal has become more involved in the world of cryptocurrencies after announcing in October that it would begin letting users buy cryptocurrencies through its platform and eventually let customers make online purchases with the crypto holdings at merchants who accept PayPal. Well, I've been using PayPal recently. I don't really like it, to be honest with you. Venmo and CashApp seems to be better. But and also I'm in China, so I use the Alipay and WeChat Pay, and the Chinese ones, and those are also much better. PayPal just seems old to me, but hey, I know they want to do the cryptocurrency thing. I don't know. They're already doing it. They're already doing the Bitcoin thing. So this acquisition might not do as much as you would hope. They want it to accelerate and expand its initiatives to support cryptocurrencies and digital assets. Yeah, I mean, okay, so basically, all right, let me pop that article. I bet. Let me highlight that. So, I mean, so their goal, to me, that means their goal is to have the wallets, the cryptocurrency wallets, and then people be able to transfer the cryptocurrency assets into the PayPal wallets, and then buy and sell it, or use it to buy things. And its initiative support cryptocurrencies and digital assets. I don't know. This might already be priced in, though. You see what I'm saying? Because PayPal already got a little boost from the Bitcoin news the first time when they were expecting to start accepting cryptocurrencies. I'm not really sure if this is. It's not really a surprise, if you know what I mean. I mean, obviously they're going to go push more towards accepting the cryptocurrency, so it might already be priced in. And yeah, it's go back to the. That's what I would. That's my best analysis. Yeah, I mean, it's not really helping the price, but it got me thinking though. Wow, my FAS is up 5.6. The Dow Bull is up 0.5. Um, yeah, I'm just looking at the PayPal app right now. So buy, sell, and securely hold currencies with PayPal. So I can buy the Bitcoin. Can I? Can I send Bitcoin in? Can I only buy it? It's something I don't. Because I would never, for me personally, I will never use PayPal to do anything with Bitcoin. Probably. I would never do that. So I never even really paid attention, to be honest with you. But I know that they were starting to accept the Bitcoin things, and for sure. I haven't gotten into SOXL yet. Can I wait to see if it drops to the 180 MA closer to? Well, right. I mean, see, that's the thing. Where is it? It looks like tech is breaking even right now. That's good news. So SOXL, I mean, it's down, but overall, it's starting to trend up. See? Hopefully. So point is, that's 24. I mean, that's still a decent ways down. So what I would recommend is dollar cost averaging. If you want to totally own 100 shares, then just buy like 10 right now. Wait another couple days, 10 more. Wait another day, buy 10 more. Or every time it's red, just buy 10, 10, 10, 10, 10, 10. Something like that. That's more what I would recommend instead of, well, let me just put a limit order down at the 180 because I mean, it's a good idea. You would think it's a really good idea because if it does go down there, but though that's the question, if it's going to go down there. And if it doesn't, if it does, it's a wonderful deal. But if it doesn't, then, you know, might go all the way up here while you're waiting to the 50 a day. Then you might actually only be buying it at the 50 day. But if you started dollar cost averaging now, no matter if it goes down more or if it starts going up, you can capture an average price. So it's just a little bit safer, I would say. Probably do that. That's just my opinion. So yeah, PayPal. I don't know. From coming from someone that's been involved in cryptocurrency since 2011, I would never use PayPal for anything to do with cryptocurrencies. I really don't ever see myself in a situation where I'd want to do PayPal. Because if I want to send someone money, like send someone money in the form of Bitcoin, then I would just transfer it to their wallet. No need to go through PayPal. If I want to buy Bitcoin, I'm going to do that on Binance or worst case scenario Coinbase. So I think PayPal is going to go to I think it's on the up and up. I do, because I think digital payment platforms are very, 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 very interesting. Because I lived in China and I don't, for the years, I haven't ever used cash. Years. So that is coming. The digital payment thing transformation is coming to a store near you. But I think PayPal is on the up and up. But as far as the crypto play on the PayPal, I don't know if that's going to go very well, because for sure they can capture some business. Don't They're not really in crypto and they already have PayPal and they're just like, oh yeah, I can throw a couple $100 in Bitcoin every now and then. But I don't think that's really going to make such a big difference in the long run. Serious Bitcoin investors are probably not going to use PayPal. I assume the traditional exchanges, Coinbase is obviously popular. I'm much more interested in a Coinbase IPO than a PayPal cryptocurrency play, as far as cryptocurrency stocks go. But overall, I think PayPal is on the up and up. And I think this is an excellent time to buy it because it's at the support. And if we need to, I dollar cost average down to the MA, the 180-day MA. But overall, I think, but not really specifically because of the cryptocurrency. Hope that answers. My safe me thinks about getting common shares. I'm SOXL and TECL tomorrow, but then my greedy side wants to get one leap each tomorrow, and I still think commons is the better play. It is the better play, if you cannot afford to dollar cost average multiple times with leaps, because assuming the leaps cost a couple $1,000s each, you know, and you don't want it dollar every single time you have to cost average, it's going to cost you $1,000 to $3,000. So that's not the best play. Although I do expect the SOXL ones would be rather cheap, since that just split 15 to 1. Let's look at that. Bet you that's cheap. Yeah, I mean, so anyways, it's going to cost you some money. Definitely going to cost you $1,700, $1,800, something like that. You could do a less than a leap, 319 days till expiration. You could get away with 12, 13, 1400. So, point is, you can't afford to dollar cost average with a few $1,000s every time, then I would just go with shares. You're still going to make money. Ideally, if it goes up, it just depends on which one would make more money. I mean, for sure, it would be leaps, because you get more exposure to the underlying, but these times call for certain measures. What's that saying? Oh my god, I'm so tired. I'm pretty tired. It's pretty late where I am. What am I trying to think of? The uncertain times calls for uncertain measures? What am I even talking about? Oh. Anyways, so we're in a big dip right now, and it might not be ideal to be spending thousands of dollars every day trying to find the bottom. But if you're spending only a couple $100s every day buying commons, it's much more safer. And you can always switch those later. Once we get out of this, you can switch them over. Of course, where are you in the world? Do you need to pay taxes on this? Is it going to kill you? What are your tax level? Like, those are questions you can answer by yourself. But if you don't like selling things, or desperate times call for desperate measures, it must not be close to midnight where you are. Because it is where I am, and long day, but yes, I'm a native English speaker too. Although it doesn't seem like it sometimes, because I've been speaking Chinese for such a long. I mean, the mix in my head is all messed up because of the English and the Chinese. But hey. Yep. So yeah, hopefully that answers you guys' questions. Hopefully it does. I don't know. Those leaps look pretty interesting though. Ford is up 3.7%. You know, I watched a review on the Mach E, whatever it's called, the Mustang, the electric Mustang. Looks okay. And looks okay. Nothing so special. And I know the range is not as good as Tesla, so I don't really get it. And isn't it the same price as like a Model Y? Doesn't look better than a Model Y in my opinion. It looks more or less the same. Colors are more standoutish. The Mustang, and the Mustang has a horse logo on it, so there's that. But to be honest with you, I don't really see anything special. And the touch screen didn't look as good as the Tesla one or the Neo one, to be fair. And the interior looked pretty nice on the Mustang, but not as nice as the Neo one. I think it's around the same price. I don't even know actually. How much does it cost? Yeah, it starts at 43. Oh. But you can get that tax credit. That was like $7,500, right? Starts at 43. Jesus, you can get a Corvette for 58, just a little bit more. And I don't want a Corvette. I don't. I don't want a Corvette. Yeah, the Model Y is 39. Starts at, and they would have the autopilot, full self-driving sooner than anybody. Battery and the range is going to be better, right? This is range is 244 to 326. 10 to 300. 210 to 300, and this is, yeah. So it's definitely, the Model Y has better range. It's cheaper. Model Y is lighter. Well, I don't know. I don't know. That doesn't really seem so interesting for me. I like how it looks. Kind of weird. It's not a car. A Mustang should be a car, no? Got 8.5. 0.3, 8.5. Model Y only 7.6. 8. Although it's better in the range, it's cheaper, it's lighter. So many Tesla bears in this world. Oh, there. I don't know how I feel about it. I looked at it, I wasn't impressed at all. The Neo is also the same price as, now keep in mind, Neo is Chinese price. Cars are a lot more expensive in China. The Neo started from 42.5. That was an ES6. Bigger one. But it was the cheapest. 42 and a half. 41 and a half or something like that, I forgot. Conversion to from RMB to USD is different. Something like that. And if it was in the States, it might be the same, it might be cheaper. Because the cars in China are. Yeah, it just reminds me, a Mustang GT here costs probably $100,000, 120, something like that. Ridiculous. Like literally. The GT version, I know, and then even the V6 is all, they also cost stupid. Pretty sure. But anyways, so I'm not impressed. So I don't really know how I feel about that. But Ford is doing good, so good for them. They continue to. 4 p.m. here. I've got a 10,000, but needed. But if needed, I could put some. Yes. Yes. Well, make up your mind beforehand because that might be important. Hey, I mean, I wouldn't say put all your money in the stock market. I don't do that myself. And I wouldn't recommend that because of these last couple weeks, and that's specifically the reason. But 10,000 you can dollar cost average. I mean, and you only want to get SOXL. So that's the thing. If you want to diversify $1,000, then probably commons would be better. But if you just only want to get SOXL, the contracts are cost. You could dollar cost average into the 300-day or the 600-day expiration. You could dollar cost average 5 to 8 times, 4 times, something like that. So it's not bad. Okay, not the only money you have to play with, so yeah, I mean, I think go for it. Wait till tomorrow. It's not a big deal. Well, it's down 4.5 now. Hold on. take a look at what's going on. FAS is up a lot. SOXL is down a lot. Semis just got smashed. NASDAQ is not doing so bad. Tech and NASDAQ's not doing so bad. S&P is good. Dow is good. Financial is good. The buzz has pulled back a little bit, but I don't know if I'm gonna hit my buy order, but I'm patient. Yeah, that's funny because maybe it's because of these. The 10-year actually is up since the last time we checked. It's almost 1.6 now. It's up 2.7%. Well, anyways, nevertheless, everything is not down that much, but it's swinging back and forth today. So, see how it goes. We could always see another swing back up, or 2 or 3 by the end of the day. Who knows? But ARKK is up almost 1%, so that's always good news. I mean, going back to the SOXL thing, I mean, it's down 4% today. Didn't hold that trend. Not at all. So, yeah, I mean, I'd put a little bit into it. Why not? It's down enough where it's pretty interesting to buy it. I'm not gonna buy it. I already have too much, but I would be though. I would be. And then average down to the 180 if you need to. So you'll get an average price around 27 if that actually happens. So that's still really acceptable. Because 27 it goes back up to normal, you could double your money at 50. And that's with commons. That's not including leaps. It could hundreds of percent. I would expect it to be 500%, even on the leaps, I would say. If it bottomed out here and bounced back up to $50. It's not going to be in a short amount of time, but it's possible. Well, anyways. That's the other question. Would you stick to SOXL and TECL with leaps, or would you diversify more with commons and get some ARKs, and buzz? Yeah, I would diversify for sure. For sure. You have to. You have to. And those are if you just get the, I mean, if you just get the SOXL, the TECL, the ARKs, ICLN, buzz, there is no chill to that portfolio. You're either going to be up a bunch, be down a bunch. But that's kind of similar to what I'm doing, so just letting you know, man. That one is no chill. I mean, even at least I have like my chill is probably the Dow bull or the S&P bull. That's probably my chillest ones. Pretty much. Or even the Apple. Yes, you could argue. Which is an unfortunate situation, but whatever. Anyway. Yep, I would probably do it. I mean, it's down enough. It's heading back up now. I mean, spark lines, things look like it's turning back around. It's just going to be way too choppy today. If you can find good entries, get the entries and just hang it up. The ARKs are not down all that much. So it's pretty interesting. I mean, we bounced up so much on what it would appear. That was a nice day on Friday. So it's not surprising we pulled back a little bit today. Stimulus is coming out, so hopefully people can have a little bit more faith. But who knows? So it looks like it's going to be choppy, but if we can break even on tech, if tech breaks even today, and especially the ARKs, we can overall break even, I would say. So get your entries today, I would say. Get your entries and just hang it up. Tomorrow's a new day. Don't force anything. Put your limit orders in and probably walk away. Today is way too choppy. Put your limit orders down a little bit lower than you usually would. If you're planning on dollar cost averaging. If you're not, then it doesn't matter. If you're waiting for the 180 day on whatever, and just. But if you want a dollar cost average, I would say put your limit orders in a little bit lower because it's choppy. Pretty flat on tech right now. Financial sector is up, and then the TNX is up. That's basically all. It's not true. There's other things. Buzz it actually did pretty good. It held up. It's up 1% because it's got some recovery plays in it, cyclicals, and it's got some tech and growth. That's a very interesting one. Don't sleep on the buzz. People make fun of it because it's social sentiment. Well, yeah, I guess so, but as of right now, the social sentiment is cyclicals and growth. So good for me. Good for us to buy it simple, just buy one ETF and then diversify it across some cyclical, some recovery plays. And really, the cyclicals, it's not even cyclicals, it's more just recovery plays like airlines and stuff like that. But anyways, S&P is up a decent amount. I mean, it's doing pretty well. Dow's up almost 1.5%. It's doing pretty good. NASDAQ, on the other hand, is still down a little bit, and then the semiconductors is down. But the semiconductors down, take it as a buying opportunity. There's a shortage of semiconductors, so it should play out. For you because, for example, AMD is a $100 company. It's 77 right now because of this dip. No joke. The AMD is past the 180 day. AMD is taking a beating, but a lot of them are. Materials Corporation MP is actually up 2.5, so it's pretty mixed across the board. But MP could be a really good pickup. But if you're on a lower account balance, less than 20, I wouldn't do so many of the bigger positions on the single stocks. I would get a lot of more ETFs, but not. It doesn't have to be boring ETFs. It can be spicy ETFs. It could be some SOXL. Could be some TECL. Could be some TQQQs. Those are spicy ETFs. Those are not boring. Or even Buzz or the SPAC ETF. It's just going to get you a lot cheaper diversification. And if you're doing the leaps, then it's cheap diversification and cheap exposure. So really, I think that's the really good spot to be in. Yeah. But if you have some extra money for some short-term calls, for sure, keep that money, keep that couple $1,000s on the sidelines, run a wheel here or there, do some short-term calls, try to lotto it. But overall, we need the meat and the bones. It's going to feed us, and what's going to feed our retirement accounts. And those are going to be the long-term hold for the ETFs because it's cheaper diversification and leaps and stuff like that. Of course, you can do leaps on Apple if you really are bullish on Apple, or you could just find an ETF that has Apple in it, and you get exposure and diversification to exposure to other stocks. CNCE looks pretty wild discount. Not sure if you talked about that yet. I mean, I've talked about Concert Pharmaceuticals, but not as a recent. But yeah, for sure, it's that gap is just. Seriously, that's literally like driving your car through your wall at your house. Or like driving the Cyber truck through your garage door. That is a massive gap. That is a huge gap. That is really as big. That's like months or a 1 month tall. So yes. So funny, cannot click it. Yeah, I was saying buy it in this zone, and I mean it's just taking such a beating, but this one be careful with. There's nothing that says it's not going to continue taking a beating. So that's trending down. Just be careful. I wouldn't put so much money in it. But if it hits this support right here, it's trending down right now. So if it hits this support, okay, then could be bouncing down, but we'll see. That's just quick technical analysis. The fundamentals on pharmaceutical was good, but could have been better. It's gapped down so much, but then the 50 and the 180 crossed, which is okay. I'd be a little bit careful. I would play it pretty safe with that one. Anyways, guys, getting pretty late for me. It's a choppy day. Like I said, set your limit orders, walk away. Not all that much we can do. Things look pretty decent in my opinion. I think they will hold. I mean, the S&P is almost up 1 full percent, and Dow is up 1.5, and it's on a course for the moon apparently. It's going up there. Oh, wait a minute. This is the day chart. God, I'm thinking that was 1 minute. Oh, that's the day chart for the Dow. Well, it's a good thing that we had Dow already. Had that Dow bull. You Dow. Good for cyclicals. All-time high right now. The Dow just set an all-time high. Oh, good for the Dow. Good for the Dow Jones. And 2020, Dow Jones was underperforming, but it's about due for a all-time high, in my opinion. So anyways, guys, leave it on that note. Dow's at all-time high. But hit me up on Twitter if you have any questions, or through email from my website. Let me know if you guys anything, and don't forget I do the one-to-ones if you have any specific questions, or you want me to review your portfolio, or teach you some different option strategies like vertical spreads, butterflies, iron condors, and whatnot. We can definitely do that. But anyways, guys, thanks for joining.